All right, what's going on, family? Peace, power, and profit. Peace, power, profit to the family. It's your brother African Emporium coming on to you live this Tuesday. I want to say Wednesday, right? I guess I'm used to coming on Wednesdays, right? Shout out to everybody on this day. Hope everybody's having a great Taco Tuesday, right? Of course, my taco is going to be on the vegetarian side of things, right? minus the soybean. Again, shout out to everybody. Uncle Josh and there. Again, got some things to discuss today. I'm pretty sure you guys been following the latest reality show drama, for lack of better terminology in terms of the war, but on the U.S. diplomatic side of things and the NATO side of things, there's this endless shakeup that's happening in these European nations where, it's not looking too good for the home team in their perspective, right? This conflict has thrown a major monkey wrench into the wheel of the central bank scenario, right? I want to call it the cabal, but I'll keep it neutral, right? This is an investment channel, right? The whole central banking community as a whole has just been, turned upside down on its head, and we're starting to see, the chink in the armor that we thought was invincible starting to crack. Not only that, equity markets themselves are starting to pull back. Not only that, we're starting to see, a lot of the commodity prices that we were expecting to rise massively at some point take off to the stratosphere. And there seems to be no end in sight, right? There seems to be no end in sight, right? As one would look and say, well, at some point this has to abate, right? At some point all this, commodity, inflationary taxation has to abate and has to come, ease or come down. Well, I say to that, by what standard? By what and whose standard? All right. So with that being said, guys, again, we're gonna discuss it here a little bit today because, again, today's turn of events was what a lot of people were expecting at some point, where the U.S. or the Biden administration, right? I should just say the U.S. government, but the Biden administration at this point, be it partisan, bipartisan, whatever, agreed to go forward with sanctioning Russia's oil, right? So, we're well, let me put it this way. America's depend on Russian oil at around they say it's about 3%, right? Meaning, oil, energy, whatever. But I happen to believe there's more than that. Why? Because if it was just such a minuscule amount, given the fact that, before all this kicked off, of course, we were dependent upon OPEC, the rules and regulations, being able to kind of, make concessions to our quote unquote Middle Eastern partners when it comes to oil. Of course, Saudi, they went in there and invaded Iraq. I got to say that, America invaded Iraq, right? Ain't no, whatever. And so the whole oil scenario with that was supposed to be a backup plan, right? So we're finding out there's a lot of things that are not adding up. Of course, we got oil here in America. We got the Gulf, we got Texas, this, that, and the third. But a lot of majority of the oil that we're getting is imported oil, right? We're getting imported oil. So is it a thing of just trying to leave our reserves untapped until we necessarily need them for future tense perspectives? Or, are we going to continuously keep going into everybody else's house, kicking in their door, trying to use or take their oil, which comes at a heavier price to you? Why? Because you have to pay that import tax. You have to foot that import tax bill, right? So, yeah, war is ugly. War has destabilized, everybody's backyard to a degree, not just in America, but South America, Europe, Africa, Asia, right? India, whatever. Heck, South Pole and North Pole, right? Everybody's taking it on the chin right now because it has disturbed the commerce, not so much just the oil. It has disturbed commerce. And that's the part where we want to make sure we provide context to when we think about these things. It has disturbed commerce, where we're already dealing with that when it came to COVID. Now we have to deal with it because of what? War. Planes have to get subverted in different routes. Ships have to, for whatever word, right? Not too many ships were really coming out the air. But again, we're talking about commodities, right? Well, we do know Ukraine and Russia, the second and third largest wheat producers on the planet. Second and third largest wheat producers on the planet. Everything you eat that's bread, pasta, whatever, right? Your gnocchi, whatever, your little couscous or whatever. Look, all that stuff, spaghetti, look, wheat, right? And they found out something weird too. Fun fact that Egypt is one of the biggest importers of wheat products on the planet, right? They love wheat down in Egypt, right? Well, this new Egypt, right? We know the old Egypt, yeah. Moving on, brother, moving on. So, yeah, so we're going to discuss a couple of those things. Happy to have you guys in the building again. Peace, power, and profit to you all. Shout out to the family coming in the building. Oba Math is in the building. Brother Math is in the door. Shout out to brother Everything. Everything is in the house as well, holding it down. Shout out to our family Be Humble in the building. Peace, power, and profit to you as well today, Oba. Shout out to Oba Chris is in the building, right? Go subscribe to Chris Wood's YouTube channel. Don't think twice. Don't hesitate. Plug his name into the YouTube search bar up there. Go find this channel, go subscribe to that brother's channel. Definitely opening up his horizons when it comes to, economic knowledge in terms of utilizing his entrepreneur, endeavors to really help people see how to get to a bag. So shout out to people who put out good content, who are definitely doers, who are demonstrators and not just conversators, right? We want to support those kind of people because demonstration does beat conversation. And that brother does demonstrate. Shout out to Sister Angie in the building already, coming through in the building, holding it down as always. Happy to have her here. Happy to see, the family, the clan, if you want to call that, right, the money crats. Right, we're showing up in the building to have this discussion here today. Let me get the link, guys, so you guys, just in case, as always, I like to extend that. Of course, we don't sit high and look low. We don't speak from a place, from a perch, and not necessarily share it with others. We are a equal opportunity channel here. Is for the people, by the people. It is the people. Why? Because the markets don't care about, your personal feelings, right? It only cares about what, following the proper perspective, proper procedure, money, right? So we're welcome to have you guys. So join us here on the link here that's going inside of the back chat or on the YouTube side. And I'll post it on Facebook and Twitter as well. If you guys want to come onto the panel and talk about what you're seeing in this market today, any particular position you may have taken, anything that you're thinking about taking or you want to discuss, we're welcome to have you here on this Taco Tuesday, right? On this Taco Tuesday. So typically Taco Tuesday day, you will go, supposed to go buy Chipotle and Del Taco and all that. Back in the days we used to do a little stuff like that, but yeah. All right, so let's see if we got this thing popping here, so I can get this link over here. All right, let's see. Hold up. Okay, I'm trying to post over here on Twitter, but Twitter is acting illogical today. Something wrong with the man, I've been having that problem today as well. When it, on Discord, I was trying to post a link in Discord. The Discord room is down for some reason, or it's down for me, I guess. Maybe they're ratcheting up on me. Maybe that's what it is. But yeah, I go to log on Discord and I can't get on Discord. Now, question: can any of you guys get on Discord by any chance? Right? I cannot log into Discord for some reason. Right, let me show y'all what I'm talking about here. I got this massive message fail screen coming up. So I hope it's not, I hope they ain't coming for me, right? I know people always say that stuff, get paranoid, but I don't even see my channel. I see my name right there, but I don't see my channel. I don't see some other people's channel as well, of course. But yeah, this is kind of odd. All right, even my black box, of course, being in black box, I can't get on. So I don't know what that's about. But so yeah, I was trying to log in so I can share this with the the Discord family, and can't get on. So whatever, right? But anyway, we're gonna go for it one way or the other, right? So we're gonna have this discussion. We're gonna speak about it. We're gonna build about it, and we're gonna try to learn something, right? As we always do when we come live, right? We try to provide context, content, and potential value of being able to contain some money, right? Right, a container for money, right? A repository, so to speak. All right, shout out Oba Chris in the building already. What's going on, Oba? Peace, power, and profit to you today, man. What's popping? What's going on your side of the woods here? All right, let me see if I got. Okay, I got my thing open. All right, just make sure. Can you hear me, Oba Chris? Shout out to Oba Chris in the building. He might be trying to get his audio together too. All right, no worries. All right. So yeah, so that's what's on the conversation. The topic of the day is definitely dealing with the idea of this Russian oil, right? Is it the new market hedge, right? Is Russian oil the new market hedge? What's going on, Oba Divine? Full in the building. Peace, power, and profit, Oba. Again, the link is going out, guys. If you want to come on to the panel here, build with the family, talk with the family, hang out with the family, we welcome to have you. Let me post it over here. Again, get this link passed around a little bit here. Again, can't get on the Twitter for some reason. Well, not Twitter, excuse me, Discord. And can't definitely post on Twitter at this moment for some reason. This is odd, but whatever. As they say, whatever, right? We're gonna rock out regardless, one way or the other, right? We're gonna do what we do best, and just go forward with our message, right? So, like, share, subscribe, of course, if that's the case. If you're new, if you're returning family, right? Definitely, thumb up the video, as one would say, right? I'd rather say that, but I guess it's good to have those moments where you can get this in front of people who value this type of information. I'll say it that way, right? As we say, it's all about your interests, right? What your interests are, right? All right. So we have an interest for us following the market. So that's what it is. All right. So there's the link, guys. Again, if you want to come on, there's the link. So let's go straight to the charts, guys. Let's make no mistake about it. Let's get to the meat and potatoes of why we're here. All right. Let's discuss, let's discuss this first and foremost. Let's discuss this right here. You guys see this right here? This is the result of, how can I describe this, right? This is the result. Again, this is a 415 bounce all the way basically to 427. And then all the way back down here to 418. 3 points off the low, bouncing back up here a little bit. This is just a dead cat bounce. Basically, in this case, this is more of a oversold on a short indicator or a short time frame bounce. But you went all the way from 415 to 427. And now you came all the way back down to 418. Somebody make that make sense. Somebody make that make sense. Well, we know what's really going on here, and we'll definitely discuss that with those who want to know, right? And in ways where we're talking about being able to plan for volatility, trade volatility. Again, be cautious. Be cautious of how these markets are very, they're very feeble right now, right? They're very, very feeble, and because of that, directional bias has to be really substantiated by, again, proper hedging, proper perspective, and risk control, risk management. Why? Because again, any given moment you'll have scenarios like this. Again, we're talking well over here, well over 12-point bounce, 120 points on the S&P. We went up as high as like 1.6, 1.7%. And now we come all the way back down, and we're pretty much red on the day. Why? Because, well, slightly green, but we'll say red because yesterday's closing price was 419.43. Here we are barely above it here. Again, you got a little candle here streaking up. Again, this is, it was oversold down here, as you can see here. That's that little pink area. That means we went underneath the 30 on the RSI. So typically, yeah, you get that, right? We're just having an RSI reset or RSI bounce. The same way when we went up here and hit overbought. But guess what happened? We stayed overbought for quite a long period. We were overbought from this point here, literally at a point here at 422, all the way up to 427. So an additional 4 or 5 points of just being overbought while the algos took control of the market during the lunch hour. Keep in mind, this was all inside of 12 o'clock. All that happened inside of 12 o'clock. We typically know what happens during 12 o'clock. That's that lunch hour. That's when the algos take control of the market. Now, it happened before 11 o'clock, right? Someone cut the algos on a little earlier. Well, some would, probably say, well, maybe. But guess what? If you look at this market here on different time frames, you will see that also 415 was definitely a hard capitulation zone, right? It was a hard, support point, if you will, right? If you will. Right. Well, how do we know that? Well, if we go to the charts, you'll be able to see it on a bigger time frame, right? I was playing the hourly chart. I was playing the 30 minutes. I was playing within that, 5 minute course, the bigger macro pictures, deduced down to the smaller time frame to see exactly where are the pivot points. An event, playing the bouncing off that, cross of the VWAP here. And so I told myself, okay, well, that's good. This would make, potentially make a good breakout play if things happen, with price action, starting to really, ramp itself up a little bit. Because we saw this big old bullish engulfing candle here that kind of sparked it. But I didn't pull the trigger here. I did not pull the trigger here. I said, if anything, this is still no man's land. Why? Because between here and yesterday's closing price of 419.43, I don't feel too comfortable with scalping long here, right? Inside of this little small window when we'd having, these kind of moves like this, just kind of run on red candles coming straight down. You coming back towards it to test it, of course, we got a somewhat of a double bottom here, right? I need you to get back above yesterday's closing price. If you take out yesterday's closing price, close above it for a 5-minute candle. Y'all know my theory. I very simple, right? If you get above a major moving average or a closing price that was from the previous day or whatever, you have to close above it. One candle has to close, either 5 1-minute candles or 1 5-minute candle. Close above it in a way where if you even back test, you kind of hold support. That gives me a better of a risk profile to play with. I would take the L if it comes back, retests it, comes through it. I can be comfortable with that. But I would not chase into it when I seen a scenario where we got a succession of lower highs coming into the market, right? Even from pre-market here, you got to spike up, lower high here, lower high here, lower high here, right? Back at just in closing price where we open, ran up into that in the beginning, and then we just had a massive pullback, right? So just continuously just washing out, people who are trying to be bullish on the market. Now, a lot of those guys probably capitulated, tried to buy this here, and then they pull back on them really hard down to 415. They probably like, man, I'm out. I don't want to deal with this today, right? Especially after what they went through yesterday. If they didn't hold, they missed out on a massive rally, a massive intraday rally here, where literally we took off around about 11:50 and ran all the way up to 427, around about 1 o'clock. Couldn't make this stuff up. This is the marketplace where I tell people it's better to be cautious than to be overly content. Why? Or complacent, I should say. Why? Because these kind of things are an act of desperation by retail traders who don't understand how markets work in these kind of environments because they never lived through one. algos who are trying to what flush out old money in a way to kind of establish what even higher short position for big money, because big money has not been buying this market. If you've been studying and following the money flow, a lot of this is retail buying. I think yesterday retail investors spent well over what $1.6 billion in trying to trade the market. Let that marinate. That means a lot of people got ran over trying to buy, and I can guarantee most of that was what people trying to buy the so-called dip, and they got ran over. I mean, look at yesterday. I mean, it's not even up for debate. Look what happened. I mean, these got completely thrashed here from around 431 top pivot all the way down to 417. Like, somebody make that make sense. And they just kept trying to buy the dip here. They 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 kept trying to buy the dip here until the close, and they got ran over some more on the way out the back door. Couldn't make this stuff up. This is the brutality of markets. If you're not comfortable being hedged, then I say stay out the market. Why put good money on on a bad trade? It's like, you got, 3 bad tires and you trying to buy 1 tire. Like, no, just you come out better trying to buy 2. Just save and buy 2, right? Unless you just die emergency, right? Just die emergency. It's just not worth it. Don't put good money on a bad trade. Don't put good money on a bad market if you feel as if there's still more pain to come. That's still your decision to make, of course. I'm not telling you how to spend your money. But I can assure you, from all the videos that we've done on this channel, assessing the risk, giving people good risk management profiles, this is what this has all been about. It's been about showing and teaching people how to be patient. Why? Because it's better to get if we living by the code, buy low, sell high, then why are we still trying to play the markets and in downturns that are very significant, as if we're trying to save the market, I guess, if you want to say that. Like, no, let the market become cheaper. There's a lot of pressures that's on this market right now. It ain't your job to save it. Now, you may take that approach. That's your opinion to take. If you do, hats off to you. From where I sit, I'm an equal opportunist investor and trader. I don't put my emotions where my money, my emotions do not sleep together. Let me put it that way. My money and my emotions do not sleep together. Right? Conflict of interest. Why? Because you're here to be a tactician, an executive mindset that has to make decisions under very immeasurable pressure sometimes, and they have to be very calculative. You can't just take the road that buy the dip, buy the dip, buy the dip, buy the dip. Right? That mantra is fading like the transitory theme by Jerome Powell. Like, both of those going down right now on a flaming ship. There's no just buy the dip recklessly any longer and think that stocks only go up. That's not how life works, right? Especially when fundamentals creep back into the picture. And right now, guess what's on the table again? Ta-da! Fundamentals are back on the table again, where you have to trade proper fundamentals. And that value matters. Why? Because outflow is telling you in so many ways, look, we got some pressures coming. Money can't just sustain sitting here when, number one, money is being vacuumed out the market by the Federal Reserve. Number one, mortgage-backed securities, treasuries, the whole nine, that stuff and to go bye-bye. Literally, the last tranche, I think it's like $6 billion. That last tranche of Federal Reserve quantitative easing money goes away literally on the 14th, if I'm not mistaken, March 14th. That last little $6 billion tranche. After that, bye-bye. And we're talking about maybe possible quarter basis point per Jerome Powell lips, not mine, as his last testimony revealed that, when he was sitting before Congress. So, yeah, things are starting to be a little bit more surreal, right? But nonetheless, we were prepared for this. Nothing new to us. We've been talking about this stuff since we've been blue in the face. But we're here now. So let's keep, having a discussion. Let's help people who are in that kind of weird space where they're trying to make sense of all of this, and do our civic duty, so to speak, right? As being voices of reason and patience, and really helping wherever we can. What's going on, Ober Chris? I don't know if you got your mic together right. I know you flip it through a little bit. Shout out to Ober Chris in the building again. Let's see if he got his mic right. He's in the panel here.
Peace, power, and profit, Ober. Peace, power, and profit, family.
What's going on, man? How's this day looking to you so far, man? It's wild out here in the field, ain't it?
Yeah, man, it's crazy, man. If you just if y'all been watching, since pre-market or after hours, and futures. You can see the fugazi. So I'm glad you got the chart up here, and you see how they ran it up to what 425, and now it dropped
427 to
back
be exact. Over.
427.
They
Okay,
took this thing all the way to 427.
yeah,
Look at this.
okay, and now it's back down to 418. So this is how I knew that they were gonna do this. If you was looking at futures last night or early, you can say early this morning too. So futures never really ran up so high to where you thought the market was gonna change over. Because if you was watching it last night, it was going back and forth between green and red. It wasn't,
Right.
a
It was in a flux.
solidified direction. So they didn't really start pumping it until, after the market opened. Yeah, it went up to
Right.
like 421 during pre-market. And that's, that still didn't really give me an indication that, oh, they was just gonna pump the market today and it was just gonna be a green day. I knew it was Fugazi. They ran it up to 427. Now it's 419, 418, and it flip flop. It's called a bull trap, what they call it, right?
Facts. Speak on it, Oba.
So, man, they play this stuff so it's 40 chess moves. That's how they
That's
operate,
all it
man.
is. 100%. Couldn't have said it any better. Complete 40 chess move here, where what we've been witnessing with these pumps, it just becomes a moment for what? Big money or institution to what? To relinquish their bags
Right,
or take higher short positions on retail.
right,
Right. They see the order flow coming in. They see them getting excited. They see them longing for the market to return back to a place of promise where it was before. So they're chasing. They're literally chasing with every big green candle. They're chasing it. Right.
facts.
And then becomes like, okay, we're back to normal. See, this is what the market does to you. It sets you up inevitably for what? Heartache,
Yep,
wallet ache, right?
yeah.
Again, you couldn't make this stuff up. And
Calls
I'm
and
saying it
puts got
because you
killed.
have to be a tactician. You have to understand how to play these moves, take
Yep.
your bag if you got day trades available, of course, and
Hmm.
then be comfortable with that.
Absolutely. Yeah. So if you bought calls early on today and you didn't sell them, you you got your premium just got killed. If you bought
Definitely.
puts yesterday, you got killed this morning.
Theta, straight theta kill. Delta spaz, everything.
Right, right. So I was like, man, I'm looking at futures last night. I'm like, bro, they doing fugazi right now because it was down and then it would go up to like $12, on the S&P 500. Tech was getting killed regardless, and the Dow, it would go up a couple dollars as well, and then it would go back red, and then it would go back green. I'm like, man, they playing. They being what they call equilibrium. It's not going, either direction. So then
Right.
they ran it up in pre-market, ran it up like a couple dollars, 421, I believe, and then it opened green, and then they ran that joker up. They ran it up, and then it started to come down a little bit, and then it hit a bottom, and then they ran that joker up, and then they did the bull trap.
Yeah, everything from again, your VWAP yesterday's closing price of 419.43. From
Right.
that period on, of course, that's when I took a little scalp on it, right? I had to see it close above that 419.43. Again, I have a basic route, but y'all know how I am. I need to see 1 5 minute candle above that, a key perch point or a key pivot point or a key resistance point, right? That came in that moment. Now, I didn't take it all the way to 427. I'd be the first to tell you. I scalped it in around like 420, 30, 420, 40-ish area. And I was, out of there around about 420, I think around about 424, 40-ish, between that and 50-ish. I was around there. So left out 3 points on the table. No harm, no foul. That's still a nice little move here based upon, again, them just ramping it. This counter here was the deciding factor where it really made me say, okay, we'll stay in the trade. Now, notably so, of course, we live by the code of what, trust your indicators, trust, when you trade, especially when you're scalping. Clearly here, I see a separation of what? between the peak of that, last candle here, at least around 427.40, to the baseline of that of the moving average. In this case, I just used the base of yesterday's closing price, right? As opposed to somewhere down here. I'm just playing within this circle area right here. And sure enough, it pulled back, right? I mean, classic moving averages at like magnets move here. Classic. It pulls back. You got a red candle here. Let me blow it up a little bit. You got a red candle here. That was that kind of like, okay, well, pause for the calls, right? Around 424.30 something. That was a resistance point. It pulls back to 421, all the way to 421.97, roughly 490 or 422. And then you had, you tried to make a march back up towards, and test that resistance, right? To see if we can break out. And sure enough, it did, of course. But as soon as this red candle came in the view here, right? Or this ideal of it right here began to, it was hesitating here at 424, like 424.30-ish area. And then it spiked a little bit. And then right there, I was like, I'm out. And clear enough, it pulls back and then, runs from there. But after that point, the scalp was in. It was worth it, the risk versus reward ratio in that moment to calculate those who were just starting to kind of FOMO buy in, looking at the flow chart, seeing volume coming in. I said, okay, I'm good here, right? I'm good here. And again, it went on and ran and made another high. Now, in that moment, clearly what you were discussing, Chris, that was a classic, a classic bull trap. Why? Right. Because it did the typical, what you would want in terms of price action. You pull back here, you consolidated slightly, and then you broke and made a new high. Of course, that's positive. But right after that, you was already sitting there up here near overbought, conditions at that peak, Right. So now everything inside of here was just chasing, because clearly the RSI was max, it was stretched. When we say max, meaning it was just above 30. We know markets can remain rational as long as you can remain, solvent, and it'll just run. But we were definitely hitting some peak points on the RSI here, which made me feel like, okay, well, I'm seeing all this green here in terms of the volume bars here. And so, okay, at some point this thing is going to hit that that proverbial window, so to speak, right? So this candle here, this green candle here on at base of 1 o'clock, there we go. Them hold half hour marks and whole hour marks are great for algos to pump too. That was that kind of last little, hoorah kind of pump move. And 427, obviously, if you go back to a bigger picture, you can see exactly those areas became very prominent resistance points, right? Because this area right here became, very relevant in terms of resistance, right? This little chatter area here, if you want to call it that. And there lies, that was a false they could take it. Again, you had a big run here. Again, that's over 100. Man, that's like 120 some odd points in the SPX.
Yep.
In about an hour and 15 minutes, 20 minutes, somewhere around. Let me see, from 11:50 to 2. Yeah, so roughly, near. No, excuse me, 1. Yeah, so 1. So yeah, roughly about an hour and 10, 15 minutes. That's illogical. It's inorganic, and it's cause for panic. I typically say it's organic, don't panic. But when it's inorganic, you better panic, right? Because it's not sustainable. It's not based upon any kind of natural causes. You can say, well, it was Joe Biden, talking about, sanctioning Russia, and we're going to figure out other ways to get oil into our country. That stuff takes time. Markets don't have time to wait on them to come up with a blueprint when there are people being, again, getting gutted at the pump right now. Like people getting torn apart at the pumps right now. The cheapest place, I got a little gas station up here where I'm at. I just one little ace in the hole, and I was like, because I always do my little gas homework. Like this was like, because I only use premium gas, I only use Shell, right? Go figure, Shell, right? Shell, when they double dip, bought them some Russian oil the other day, they were like, bro, this oil cheap over here, bro. I don't know what y'all talking about. And brother, when it got them some about 100 tons of it somewhere around there. And then they had to turn around reverse course today. I said, look at this here. Boy, this cancel culture stuff is it's becoming a cancer in itself. Why? Because people trying to conscious shame you for trying to protect your sovereign ability to make decisions that's good for you and yours. Like this makes no sense. And I'm saying that because on the corporation side of things, the business side of things, they'll come for you. They'll come for you.
Right.
Like, I don't care. They can say what they want to say about me. That's why I'm independent. And I love that because I don't want to be a part of no organization that's trying to virtue signal, cancel coach, all this dumb stuff. That's just my opinion. My opinion when I'm saying this here. A lot of it is based upon a whole lot of illogical, you know, sentiments, and therefore it's just not even worth it. Because we already know at the end of the day, if business is supposed to be based upon, supplying the service and supplying the product, again, void is just something just horrific. Some would say, of course, war is horrific. Okay, yeah, war is messy. But if you notice, again, if you're going to play it from that perspective, you're already picking a hypocrisy side of things. Why? Because when it's happening on our side, no one wants to say nothing. When we're running in somebody else's house, kicking their door in, bombing their kids, no one wants to say anything. Oh, that's the price of doing business, bro. Like, you can't have it both ways. So you can't take the cancel culture approach, the virtue signaling approach, and you're doing all this, ratchet stuff, but somebody else's of a superpower entity value is making moves in their perspective. Hate, like, love it, indifferent to them, not supporting it either way. I'm just speaking from a base of common sense. In lies, oh, you got to get on board, right? So Income MasterCard, Income Visa, Income American Express, Income all these companies, right? Again, they even banned Russian cats, bro. Russian cats getting banned. Well, you couldn't make this stuff up. It's a mess. So you say to yourself, okay, what's the extent of what's causing all this, right? It got to be more than what it is. What do you say to that, Open Chris?
Say it again. I'm sorry.
I was just asking. It seems to be more than what they're saying it is. It always is, of course, but them just banning any and everything has to do with wrestling, as if the Russian people themselves gave Putin to go ahead and do this. Like, this is a government decision. The same way when the government says, okay, we're going to give $12 billion of American taxpayer money to the Ukrainians. And guess what? The American people are fine with that. Now, I have to ask a question. Again, hate, like, love, and indifferent to it, because we take a neutral stance on many things. As an investor, I don't deal with the emotion side of things. But I asked this question from a very independent perspective here. Did any of you guys sign off on that $12 billion that's supposed to go to the Ukraine that they're trying to push together in the package right now? Anybody?
Absolutely not.
Did they do a special vote? Did they say, well, hey, we're asking the American people your thoughts on this? They're making decisions with or without your consent.
Yep.
And then they saying, well, we ain't got money for this. We ain't got money for that. We don't have money for this. We can't do this kind of package deal. We can't do that. Nope. All along now, this is going to be printed money if they come up, with a package to send to Ukraine or whatever, right? So what does that mean? Well, that means, okay, yeah, it's the extra form of stimulus that Wall Street can get behind and get excited about because they love cheap money. But number two, again, it's going to what? Go towards the national debt, and it's going to add to the inflationary side of things. Why? Because that extra bit of money or that debt value that's coming out of your taxes, it's going to also aid in your own suffering. At the pumps, at the grocery store, at this, at the third. Well, you say, what's a small price to pay, bro? It's liberal. It's us being, liberal minded. We're doing this for the greater good of, a suffering nation. Okay. All right. So I'll just leave it at that. But I'm just curious to know, how you guys think about that. Why? Because this is it's adding fuel to the fire. Not so much the idea of just sending them money, right? That's that adds to it. But this idea that we can't become fiscally responsible as a nation because we're too busy trying to fight everybody else's war and pay for everybody else's debt. I repeat, we're fiscally irresponsible as a nation because we're too busy trying to fight everybody else's battle and pay for everybody else's debt. How are you going to have a what they call quality way of life if people are making these decisions over your situation every day that you didn't agree to? Your corporation or your job that you may work for is, we're going to, support this and support that. Again, that should be individual rights to do that. No more, no less. However, them just saying, oh, well, we took a poll, and I saw something today. I think it was a Quinpeg, some whatever the polling thing. It said that 7 out of 10 Americans are willing to pay higher prices at the gas pump in support of Ukraine. I'm finna ask y'all, did any of y'all vote? Did any of y'all vote on that? But I'm just asking for a friend. Did anybody vote to pay higher gas prices, in support of Ukraine? Meaning, this is the government's excuse to come up with funding packages to send it overseas. Same way they did with Afghanistan. Now they botched Afghanistan, the war itself and the withdrawal, and American people had to pay for it both ways. They brought people from Afghanistan over here. Some of them were not necessarily who you think they are. They just brought them over here. Gave them housing, gave them money, gave them things that people in America can't get at the unemployment office, at the social services. You can't get half of those things majority of the time because of all the red flag and benign neglect. They bring these people in and just giving them all all these magical benefits that come out of nowhere, and you're supposed to be fine with that. Again, they're not asking your opinion. That's all I'm asking. They're not doing no special concession votes. They're making executive decisions over your welfare, safety, your money, your taxes without your consent. It's nothing new. I know I'm preaching to the choir when I say that, but I'm going somewhere with this. I'm just saying that because, in essence, that when you think about it from a place of being in this country and what you think it really stands for, again, I have to say think. Why? Because we know it's not what they claim it to be. You have to be cognizant of understanding exactly why we take this approach to being what? Entrepreneur mindset. Being in an entrepreneur mindset, I should say. Why? Because you have to be able to find ways to self-protect yourself, right? You got to put a hedge around you and your scenario from a monetary side of things. Why? Because when it becomes scarce, when it becomes diluted, when it becomes elusive, you're at the behest of these same people that's making these decisions every single day to take your dollars and send it abroad without your consent, while your situation is jacked up. I mean, they got money still sitting, from the EIDL loans and the PPP loans. They still got money sitting in some of these states that didn't send that money downrange to people that need it. Small businesses, right? People that needed help with their rent, moratoriums. The states are still sitting on some of that money that came out, almost a year and a half ago, near 2 years. They're still sitting on some of that money, as if people wasn't lobbying to get that, get that help. But when it comes to anybody that's coming over here from a quote unquote refugee perspective, if they want to call them that money gets cut instantly. That money hits them people's, pseudo accounts, if you want to call that, instantly. They got housing set up. They got, again, money. They got all the necessities they need. Again, people come across the border, Mexico, instant benefits. This is the reality. And I'm saying that because it's not about whether you for or you're against any of those kind of perspectives. I'm just saying from a place of knowing that you're being priced into all this inflation. You're being priced into the ideal of you having to kind of bear your own American cross, against your will. Vaccine mandates, again, another story for another day, right? The jab, right? But I'm just saying that because they're levying these harsh decisions over you and your situation without your input. And you're supposed to be comfortable just sitting there and just going along with it. I'm like, make that make sense. Like, where's the sovereignty in that? Where's the, quote unquote, freedom within that? And I'm saying that because if your wages have not gone up, if, again, like I said earlier, if your quality of way of life is not improved under all this stimulus money that has came from the Feds, $9 trillion worth, $9 trillion worth due to COVID. If your quality way of life have not improved with all that stimulus that has came off the printing press, then make that make sense to me how you're okay constantly just being last on a totem pole to receive that what you've been paying into in this country. You bearing your cross at the gas pump. You bearing your cross in the grocery store. You're bearing your price, your cross when it comes to paying higher rent right now, higher mortgages, right? Well, again, if you called it a good rate, but it still ain't, it's no different because the housing market finna go belly up in a minute, right? Good luck with that one. Maybe we need to do another show on that soon. So a lot of things are going belly up right now. Supply chain issues ain't getting any better. Inflation is still running rampant, which we know it to be more than what they said it is. We got a CPI data readout coming out basically Thursday, and everything that they're doing now is just trying to save face. They're just trying to save face, and seem as if Russia disturbed everything that we were doing to try to make things better for you guys. It's an excuse. They're searching for an excuse. They're searching for excuses. They're searching for excuses. They needed this. Unfortunately, I got to say this. They needed this conflict in Russia to pop off because we know, for us, just basic math, basic economic, situation here, situations that we're dealing with here in this country. They needed a scapegoat to deal with failing policies, failing ability to compromise in terms of Washington, this whole gridlock between Democrats and Republicans that's just Looney Tunes in itself. Like nobody takes these people serious any longer. Like who really takes politicians serious at this point? Seriously, I'm just asking for a friend. Who really takes these people serious at this point in the game? Like all these cards have been revealed. Like people know that these people are just high-paid charlatans. They want to be celebrities as opposed to civil servants. I repeat, they want to be celebrities more than being civil servants.
Yep.
They want to trade away your existence through using the stock market to get wealthy while telling you that they ain't got money for this, they ain't got money for that. They got money for the schools, the bridges, the road. Oh, we did an infrastructure bill. Yeah, that's well, we got something, at least something to make that make sense. Again, it's always window dressing. It's always window dressing. So these conversations are important. Why? Because it has to be something more than what they say it is. The reason why they're going above and beyond on a global level, at least the partners of America, to try to, again, blemish the ideal of Russia. Now, this is a superpower. Now, Russia is a superpower. People didn't know how intertwined Russia was to our economy and Europe's economy, and Brazil and Africa and Asia. Turns out, Russia was just as much as an important integral part to the global, I guess, marketplace than one would probably have thought. Again, Western media would never really unfold the true nature of how all this stuff really works, right? It's always going to be bits and pieces, and you have to do your own, research on your own. But ultimately, this is some kind of form of I don't know. It's some kind of form of a sanctioned coup. I call it that. It's a sanctioned type of coup where they're trying to overthrow the ideal of what Russia stands for when everybody was economically attached to Russia in some kind of way. It's deeper than what we're saying, what we think it is. I can assure you that. So I'm saying that again to say this. Why? Because they want you to bear the economic cross of us, doing what we quote unquote call the right thing and deal with this a little longer at the grocery store, at the gas pump, at wherever, right? Having less. Your wages ain't really going up with the level of inflation. We just got data came out just recent that proved that the last ADP numbers that came out Friday last week. How much did hourly wages rise? Basically next to nothing. How much did the value of where the PCE and that of the CPI and PPI sitting there now? It's steadily rising. It's steady rising. So yeah, it goes back to that meme we put out a while back, right? You got a little raise, right? You got all excited. And guess what? Throw it in the trash. You got 3% raise, 7% inflation. Ate all that up, and you still went down, 4%. Like you couldn't make this stuff up. So again, having that real conversation, because y'all know when we come on, we're gonna talk that real. We're not gonna give y'all that fancy stuff. We're not gonna give you this old kumbaya. No, because people ain't really making good decisions with those kind of commentaries, standpoints any longer, right? We know people, YouTube impressioners out there, and they kind of always try to talk that everything is fine. Okay, yeah, if you got to talk to children, that's a different scenario. We're talking to adults here. I'm talking to my peers here, which is you guys. It'll be remiss of me to sit here at the I don't, care about, the information in a way where, you don't want to cause panic, but people got to hear the truth for once. Like, you've been dealing with a whole lot of smokers and mirrors for so long. People don't know how to differentiate between what's truth and what's what fiction. So we don't take that approach over here. We're gonna give it the best way we know it to be, based upon what are the the rules of engagements are, what are the primary sources that are out there that's leading us to make these decisions, void of, again, someone trying to spin it, trying to contextualize it in a way more than what it is. Again, the truth don't need a mediator. The truth don't need a spokesperson. It just needs to be told as is. That's the problem with a lot of what we're dealing with here in this nation. Why? Because everybody try to sanitize the truth. Like, no. In moments like this, when your wallet is being affected, there's no way you can sanitize the truth. In moments like this, when you got to cut out a lot of stuff that you probably doing for your family, your kids, and all this stuff, you can't sanitize the truth to make a person feel comfortable in that situation, unless they just like being glossed over or lied to. So that's why I say, I don't take that approach over here. We're gonna give we're gonna speak it direct the way it is, and that's just that. And if it's going to help people be more, prudent in their decision making, at least more cautious, then that's a win. Why? Because you're not going to just jump out there like most people are doing, like we just witnessed in showing with the market, right? People just chasing, like all the people that were just chasing, they just chasing. They were people buying up here, chasing the market, chasing, or just the ideal of just trying to, in their mind, believe in the scenario that everything is just fine. Not to say that everybody may have took that approach, because we understand that markets are made, in volatile moments like this is how you make a lot of money. Why? Because you get these wild swings. This is just no more than just, again, trading peak to trough scenarios here, right? We talk about that a lot, right? You got troughs, you got peaks, right? You got pivots within that value, right? You got all these things happening in real time. It's all based upon us learning how to play under the rules of engagement. Again, moving averages act like magnets. What you see right here, there's your depth of separation, even on the pullback here. Hence, you came right down to the point where we closed at yesterday, even more magical, gave you a support point there, even though you overshot it here a couple times. And then you kind of made your little your little round the bottom there. Now you finna go back and test this moving average here, potentially. This 20-day moving average, which is the blue line here. Excuse me. And the markets are just kind of feeding off of all these little ebb and flow pops at this moment. But for the most part, a lot of people who are up here trapped at 424, 423, up to 427, they better hope and pray this market get bullish, a little bit more extra bullish on the back end of the day. If nothing else, maybe a futures market. Because essentially, like Overchrist was saying, this is a classic bull trap. Big money has been dumping on retail traders religiously. I'm not just saying that because it sounds good. This is the truth. We've been following the outflow. We've been seeing the polls where you're starting to see bigger money has just been selling into a lot of these bigger pops. They're selling into these pops. And you still got a few fundamentals out there still trying to take that bullish narrative. Again, it's all for commentary, just to kind of let people know, hey, it could be worse. Stay invested, do whatever, right? Oh, unless you're Tom Lee, right? Tom Lee, like the biggest shield in Wall Street right now. His predictions have been so wrong in so many ways, but yet they still keep putting this guy in front of cameras and saying, go out there and speak to the people, Tom Lee. Like, he's like the lap boy of Wall Street. So CNBC got a do boy in him, and he set a lot of people up. He was literally saying that the bottom was in. He was like literally saying the bottom was in the markets. Of course, when we came down and where when we hit this 14 here, or actually even around 420 area. But it was like up here around about 430 when we got back around 435, 437. I think it was, somewhere around there. He came out and was like, yeah, the bottom is in right now. Meaning, so if you call the 410 bottom, possibly. If he was calling the short-term bounce around 430, 420 the bottom, well, guess what? Right about now, he eating crow, because guess what? We blew right on past that 420 support, literally, right? Literally yesterday. Now, keep in mind, he made that commentary, though, up here. I got to bring context to that. He was making those talking points up around this point right here. 436, 435 here, in around that point. That's when this commentary came out on that. And right now, we're sitting down here. So a lot of people are like, okay, if Tommy says the bottom is in, right? Again, Bitcoin's going to 100,000 still, right? He said that last year, of course, right? We got 69,000. Give him credit for that, right? I give you if you want to. But a lot of people got trapped. A lot of people got trapped up here. Buying leap positions, longer position scores going, trying to, get back to 440, potentially 450. A lot of that stuff, all gone to ashes now. Worthless positions now. Worthless premium at this point. If they didn't sell, get in and last little bit that was left, all that, just went basically to zero, or at least close to it, depending on how far you got your contracts out. So again, this is the marketplace you have to deal with. It's going to be really rough trying to time the bottom and time the top. So in this moment, like we just discussed last week in our training session, I want to make emphasis of that again. This is when you have to be comfortable trusting your indicators, especially if you're trying to trade the market in real time. You got to trust your indicators. You got to trust them, right? Why? Because you can't make sense of all this on your own, potentially possible, because if you're not a person who's really privy to fundamental analysis at a deep level, understanding political warfare, the aspect of warfare, whatever, military science, whatever, political science in terms of economic, talking points, coming out of Washington, it'll have you messed up now, because those are things that are actually driving the market now. Again, Ukraine, inflation, whatever. The individual spotlight when these companies are putting out, information about the company's growth or lack thereof, a lot of that stuff really ain't really carrying weight right now. Y'all notice that, right? It's like if you come out and report earnings and you report, weaker than expected guidance values, like on your forward outlook, then the market's like, oh, well, about that. We don't know if we want to rock, rock with this going all in you right now, right? Like markets are pulling back, like stocks are pulling back, especially a lot of high growth stocks. We know that because a lot of them were just overbought. They were the safe havens, right? Before all this stuff kicked off. All right. And so now we're back to that same point now where the markets are saying, okay, yeah, it's bad, but where else can we go, right? We want to still believe in Apple. We want to still believe in Tesla. We want to believe in, Google, Amazon, Facebook. Well, Facebook, yeah, forget about that. Facebook just been getting pummeled. But anyway, that's the whole narrative, right? That's the narrative at this point, right? So, yeah, this is a market that's just it's very skittish right now. I'll use that scenario. The markets are very skittish right now, and for all the right reasons, right? All the right reasons of late. Why? Because a lot of people who just kept taking the approach that the market can do no wrong, right? Good news is, or bad news is good news, all that kind of stuff, right? They're getting a crash course on understanding that game plan only works until it does not work, right? Like with anything in the market, right? It only is good as it is until it does not work, and then you have to adjust, audible, switch up your game plan, do something else. I mean, look at this market on the bigger picture. Again, I literally, I think last week I put out a chart. I put like a post up and said, daily charts matter. Daily charts do matter because you need a bigger perspective. Look right here. See that point right there? I drew literally on the chart at this point for the SPY. I put a big old line across that said resistance, right? On the SPY, 440, big old resistance right there. So anything from that point on, yeah, you're trying to play catch up, right? Now keep in mind, this was last week, right? The ideal of knowing that we hit that crest at around 440, right? And everything from that point on has been weakness, right? This day here, forget about it, right? Literally yesterday, right? Again, Friday, what was the issue? We closed at a doji, right? We closed at a doji. Now, typically a doji like that, if you look at it on the daily chart, it looks more like a doji, if you want to call it that. Some might even say a gravestone, right? But it denotes potentially of a reversal signal, potentially. But did we get that, coming out of the weekend? Why? Because even these candles sometime are going to be give you a false readout. Why? Because we're dealing with something that's, existentially much more bigger. We're talking about a war. We're talking about increased inflation, oil, food, gas, energy, whatever, right? Because of this whole, issue surrounding, what's going on in Ukraine and Russia right now. That becomes your elephant in the room until it does not. Make sense? Essentially, that's it. That's your elephant in the room. Your 300-pound gorilla, whatever, 400-pound, whatever. That's your elephant scenario.
Good point.
Everything you hear outside of that is just going to be a whole lot of what? Yeah.
Fugazi.
Right. 100% fugaziness. Fund managers trying to still, preach the market up like good, Sunday, Reverend Fatback type of, preachers, right?
Yeah.
Right? And they just kind of pump these people up in the pew to run out there and buy this buy this market. Because anytime retail investors get emotional, what do? They lead, their money is led by their emotions because they're wanting to get back to a place where they feel like everything was gravy.
Yeah.
They don't understand that this is what you signed up for.
Mm-hmm.
Right? They don't understand that. They never really been through that. A lot of them just came in the game literally because of COVID. They have no historical value, right? What they call no body of work to really rely on. Now, guess what? The body of work is there for them to expand, but they're not doing that kind of research. They're not going back looking at those old charts, right? They're not going back looking at pivot points and certain things that has to deal with catalysts that has caused certain things in marketplace. To them, they're like, man, forget all that. Buy the dip, bro. Buy the dip. Memes, t-shirts, coffee mugs, ink pens, Discord rooms, clubhouses. Everybody got this little approach that if nothing else, bro, buy the dip. They made it a comical, aspect of commerce that people actually bought merch and everything. And it's reckless. Why? Because you'll begin to reinforce that inside your head and take on the approach that is it got to be real. As if the market told you from day one, oh, bro, this is a game of risk management. This is not an exact science. So convince me how buy the dip is an exact science. Now, guess what? On a long-term basis, meaning if you've been in the game, let's say, 40 years plus or whatever, then you might could take that approach, right? But outside of that, you can't really make that assessment if you just jumped into the game yesterday.
Right.
You see what I'm saying? Look at this here. Going back to 1980, right? Going back as far as, in this case, 1993, right? We'll just go to start at the 1990s. Now look at how the trajectory of the market has gone since then. Now, even when we had good boom cycles, come back naturally, organic, correct, back tested, came here, back tested. This was, of course, dealing with, a lot of things that were happening at this time. What was like 2009, 2007, 2008, subprime lending crash, right? And then, that was your organic, again, organic correction. Then in came a 13-year bull run based upon quantitative easing, where Ben Bernanke kickstarted a very reckless policy. It came out of Greenspan too, but Bernanke kicked into another level, right? The idea that he had all this power to print all this funny money and juice the markets. The markets got hooked on it, like drugs, and it has been on this artificial, I don't know if you want to call that an artificial run like never before. Then in came COVID. That was your reset moment, right? You had a reset moment. Look at the size of that candle, those candles. You literally had a Jerome Powell Federal Reserve that took one of the plays out of the playbook of Ben Bernanke. In came all this funny money again. It didn't make the quality of life better for the average American citizen. It made it better for the Wall Street heads. I mean, it's not even up for debate at this point. If you're still questioning that at this point in the game, all I'm gonna say is, you know what? You might have to close out all your bank accounts, get you a nice little one-way ticket up out of America, and go somewhere. Right? Because it serves you no purpose to be here at this point if you're that comfortable letting people lie to you in your face, spit on you, urinate on you, call it a goat or lemonade while they're going in your back pocket, taking everything out your wallet. And you're comfortable with that. Why? Because I say this all the time. Why? Only because you can go to McDonald's at 2 a.m. in the morning and get you a little, a McFlurry burger. Mm-hmm. If that's your form of freedom, then hey, knock yourself out. Right? Yeah. Knock yourself out. but from where I sit, I know I'm around a lot of smart people here, and I know you guys get it. Y'all understand what this is about, right? It's about, again, search and seizure of being able to what? Find and build and create wealth, right? You're not going to do that again, giving somebody your hours, giving somebody your entire life for 20 years, on the clock every day faithfully, and not have other streams of income to protect you or to hedge your job, quote unquote, right? To hedge your job, because the cost of living is going up every year, right? The cost of food, gas, and energy items are going up every year, void of even what's going on right now with Russia, every year consistently. And if you're still feeding off the idea that, oh, this is that, and you're not doing your own research, then yeah, you're being sold a bad bill of goods right now.
Mm-hmm.
Why? Because the money is made over here, right? In these instruments, these assets. This is where the money's at. This is where the money's at. Look at this. All this right here, natural. Everything, actually from this point on is unnatural. This is what they call inorganic. From this point right here, literally all the way through here is inorganic. We're actually coming back even through here a little bit, but just for the sake of just, historical value, all this right here is inorganic, right? Nothing goes up in a straight line. In market terminology, this is considered to be a straight line in the SP 500. When you have this kind of move like this right here, and it's bending always straight up like this here, that's inorganic, clearly. High. But you had people still saying, oh, okay, up here around 450, 460, 470. Man, look, we're going to 500. Potentially, right? We had definitely some vestiges, opportunities for that could potentially happen, right? But here's the deal. We know we're doing that, or we're making those assessments on the idea that this is a very risky scenario. It is nothing really warranting in it on a real true organic side of things, because you had companies that had bad earnings, bad growth. They were just still in the in the same mind frame of just trying to do a lot of buybacks to keep the EPS up, earnings per share up, so they can try to beat on their earnings. But no true capex spending, no true R&D, no M&As at great levels. Now we've been seeing some M&As happen here and there intermittently, but nothing really in terms of really doing mergers, acquisitions. All this stuff was going down in the middle of COVID, where they just was enriched by cheap money by the Fed. Zero interest rates, borrowing on $1 billion plus loans. Are y'all kidding me? And they just sitting on that money, right? Doing other stuff with it besides, really putting a moat or shield around their company or their business model. And we're starting to see that now, because a lot of those companies end up doing what? Especially the ones IPOs that came in underneath the back end of all this stuff when it was happening, and it got thrust into cheap money by the Fed. They couldn't IPO at a more better time in some cases, right? Because they got their boat lifted with the rising tide of the Feds, right? But when they had to stand on their own, like what we're dealing with right now, what are they doing? They're failing miserably. Look at companies like matter of fact, let's go. Let's do this real quick here. Look at the companies like, let me get out of here. What's going on, Ober Brandon? See you in the building. Peace, power, profit, Ober Brandon in the building. Shout out, Ober. What's going on, man?
What's happening? How y'all doing today?
What's up, Brandon? Peace, brother.
Man, doing well,
What's up,
man.
family?
What you see out there in these streets, man? These Wall Streets.
Man, I see nothing but blood. Boy, they running scared.
Boy, I'm talking about, boy, they trying to do everything they can to stay relevant, ain't they?
Bruh, they trying. It's not gonna work.
And we love it. Now, keep in mind, we're not anti-market. We're a long-term investor like everybody and anybody. But we're still under the mindset that we love a good discount. And number one, we understand when froth is definitely froth, what froth is. So that way we don't get, again, emotionally connected to anything. So you're saying these kind of companies here that we're talking about here, this is what I'm talking about. These companies came in at a point when the market was prominent. Rivian, I mean, couldn't make this stuff up. Stock went up as high as 170, 180 plus. And now it's at 43. Somebody make that make sense. Right? Somebody make this make sense.
I feel sorry for anybody who bought it at IPO.
100 and some, yeah.
Look at
Man.
Wait.
All that hype. And then not only did you take out your IPO price, this was the underwriters who got in on, they coming down. It's an underwriter price now. So you actually get into JP Morgan and Morgan Stanley, all them type. You actually get into their prices down for front running it.
Man,
Make this
that's
stuff
tough
up.
right there, boy.
Think about it. Ooh, boy. Look at that. I'm talking about Succession of Red Can. Look at that run on right there. Boy, look at them. What they call it, 3 black crow. I'm gonna call it. No, that's right there. 5 flat tires.
5 flat
tires. That's a new can to run on. Struggling. I mean, and we could just do this for days, right? Look, man, it's messy out there, ain't it? Boy, it's messy. And we could just show people exactly just how they just, constantly, like let me see what else we got.
And right quick, I want to shout out to Brother Andre in the chat because he said, "Hey, it's time to start looking for sales in the market," and he's 100% right. The market is probably, I think, last time I checked, it's like 25% off the high, and that's when you normally want to buy 25% between 30% off the high, and that's what I've been doing. I just been looking for a good deal.
Pacing yourself.
Yep.
See, that's strategy. See, pacing yourself is a strategy, guy. Again, dollar cost. We call it dollar cost average, DCA. It's the same reality, but you have to learn how to also pace your money. Why? Because we talked about that before about, sometimes being a little premature, but it all depends on your risk profile. Now, if market's still signaling you that, we could potentially go a little lower, it's still up to that person to make that decision in terms of how they want to move within that flux. Right? We do know, again, for what it's worth, again, there's a lot of things out there that we're comfortable with now, knowing that we know how to track fundamental analysis on a more on a secure basis, right? Inflows, outflows, again, all these things that really matter in terms of what we say, follow the money. We're getting more and more comfortable learning how to do that thoroughly. So when a person's putting together a buying plan or a thesis, they're doing it under the auspice. It's not just, I'm just gonna buy the dip because the stock fell 20%. I got to buy the dip here because why? If I don't buy, I'm gonna look like like I'm anti-market, something stupid. I be hearing that a lot in some of these groups in the chat room. I be sitting there like shaking my head, like, are these people serious? They actually think they saving the market. Like, you doing this for the market or you doing this for your own personal gain? My bad. When did they tell you had to sign up? That you got to do this for the market in order to get your brokerage account. You having a brokerage account is the freedom that you've been waiting on, right? To be separate of having someone tell you how, when, whatever to do with your money. Like, that's the whole point of this, or in my opinion, at least. I would hope that's the case, or thought that was the case. But again, a lot of people out there, they're just, I don't know, they just whatever, right? But it's the same reality. So we talk about this, how this rising tide lift all boats, again, false sense of security in marketplaces. End result, it's just been catastrophic. Lucid, same scenario, right? 50 some odd dollars, near $60 a share, all the way back down to 20. IPO somewhere around 25, whatever. It's sitting up here at 24 and change, whatever, give or take. Again, couldn't make this stuff up, right? Couldn't make it. No, it ain't IPO different now. I got the wrong chart. Let me go back. Back. Hold up. Where we at? Okay, yeah, we did. We're back there. I know we should be there. So again, prominence. Now you way back down here, right? So yeah, I guess you can say I got some support in around this point here, from $20 up to 24, whatever. So you could probably assess a better risk profile maybe going forward if that's the case. If you think about taking a starter position here, but the company came out just recently said what? They're struggling, right? Guidance is just straight struggling. Supply chain issues, materials, all the things that we've been talking about. They're figuring out that it's much more difficult to run a manufacturing business, right? This is not a resale business. This is a manufacturing business. Everything that Elon been telling these guys is jumping into space. Reason say, this nigga just so easy. He's like, bro, y'all have no idea, and it's showing. And this is just one case study amongst many, but I'm just saying you have to know more. It's more to the story than what's being told to you. From a person just saying, hey, just buy the stock because it's this, it's that. Like, no, there's more to it. Take the time to learn out where your money is really going. Meaning, what's its financing? What is it really financing? Right. So, I mean, it's I mean, it's not even comical. It's sad because that's what happens when you don't, take the time to really learn how this stuff works, right? A firm. Like, how many people are excited about a firm? I was excited of a firm at 50. Like, all this when this was coming down, I was like, man, look, I'll be about around 50. True story. I got post to prove it. I said I'll be about around 50 something. But I ain't finna buy it nowhere in no hundreds, no 150, no 70s, no 60s. I was scalping it in terms of buying scalp positions in the options trade, but for like a long-term holder, I was like, look, maybe around the 50 something. Yeah, you got my attention. And guess what? It went lower than that. So guess what? It's really probably get my attention once all the dust settled. If it stay around about 30, 35, 20, I know I'm being a little liberal. And I said, as an investor, everybody want to get a discount, but man, you talking about high 20s, start a position. But see, this is what what it means to be patient. Like, everybody was buying up here at 160, 150. They was all excited about, oh man, this is crazy. They got the deal with Amazon, bro. You can get, now you can use firm on Amazon. Oh, this got to be it. And that happened all around these prices here when it was ramping up. All this stuff was happening in around this time frame here. The deal with Amazon, getting on some of the other platforms to use your firm, right? It's buy now, pay later business model. All this is gapping up, ran it all the way up here. And now you've taken out that, you closed the gap here at 70 plus, back tested it here on the resistance points on the way down. So there's your lower high. And now you came down here lower, made another lower high. Now you're making lower lows. Oh, and the economic situation ain't getting any better. Why? Because we get ready to go into what? Higher what? Interest rates. So buy now, pay later on higher interest rates, unless they can really pad some of that what? High interest rate value. Now, it's only a quarter basis point as of now, but inflation is still through the roof. So quality spending, or the use case of needing it when people may get stingy because they think about that deal of maybe going into a recession, or it's just the price of goods and services so expensive now, you really cut back on a lot of what? Ancillary luxury item, type of spending for the most part. Matter of fact, we got some data coming out this Friday to build upon. We got that Michigan retail number coming out. That's a very important piece of data point. Basically, showing whether or not, how well the retail consumer is faring under all this inflationary pressure. So y'all might want to definitely check into that this Friday. That piece of data comes out this Friday. And again, we still got Thursday going to be crazy because, again, we got CPI data coming out. So I might have to just go live Thursday, right? That might be one of them what they call bow tie events. I want to see this number two. Now, whether they cook it or they don't, but I can assure you, we talked about this last time, right? Y'all remember we went over this last CPI data over Chris and over Brandon? We was like, how do you tell the true CPI data? Where do we go to find out the true CPI data, guys?
Oh man. I caught a brain fart.
I did too. Don't say it, Brandon.
It's not investing.com. You got to go back to the other one.
CPI data. Where do you go to go check those tea leaves at? And y'all know we go through it every day. Y'all sitting there happy right now because it's the main one thing everybody checking right now that they worried about right now. Hint, hint, wink, wink. Y'all know where to go. Matter of fact, let me put this up to I'm gonna cheat a little bit. Cheat code.
You go to Fred.
Of course, Fred has that, right? It has certain data on Fred, right? Which is the Federal St. Louis, right? Within that, what are we going to look on Fred to figure out what that looks like, though? I got a cheat sheet up here on the screen right now. What is that cheat sheet is telling you what so many ways what we're looking for? What do you see right here on the screen? What's in the middle, around that middle right there? What those things right there what did America sanction today?
Oil and energy prices.
So what are oil and energy? Where are they staged at on as what? What are they staged as? What is oil and energy? It's a what?
Oh, commodity prices.
There it is. So if it's a commodity, right? You can track commodities, right? Because they're more organically what? Slot rated, right? They're what they call spot price values, right? Especially on the COMEX side, right? On the future side, right?
Right.
So if you go to the, let's do that real quick. This what they call this, what they call refresh your memory, right? Refresh your memory, right?
Yep.
This is how you do this organically, guys. As they say, it's organic, don't panic, right? It's organic, don't panic, right? We always gonna lead people to the well, one way or the other, right? Because we realize that this is a game of what? Primary sources. No matter what they tell you, no matter how they sell you, right? We know exactly where to go find that what? That good, right? Right? We ain't gonna be struggling. Why? Because we can come over here.
Yeah, go to the commodities. Yeah.
Right?
Commodities
See,
market.
we cut out all the what? We cut out all the chatter real quick. Right? We cut out all the chatter real quick. Why? Because we know where to go essentially to see exactly what has been happening. Now let's do this right here. Now CPI data comes out when again? This Thursday, right?
Yeah.
And CPI data tracks what the markets what from month to month, right?
Mm-hmm.
So instantly
right.
You come over here and say, well, okay, what do I want to? I want to see what has the commodity market. And there's many others on here too, but we just got some of the basic ones here. I want to see what the commodity market has done over the past month. That will tell me whether or not the inflationary side of things have what cooled down, abated, or what, or they still peaking, right? Would y'all agree with that?
Right.
Would the gentleman on the panel agree to that? You guys agree with that? Would you guys agree with that in the back chat on the YouTube side of things? Are you guys with me here? Organic data. I'm sorry, did I have to pay for this information? Did any of y'all have to pay for this information? Is this not a free website?
Nope.
Right? You know what I'm saying? As far as investing.com, free 99, right? Look right here. Click that month tab. Now let's do it at the top. Now, let me ask y'all this. CPI data comes out again this Thursday. Well, we know why wheat and oil just jumped even more recently because of what? Russia, right?
Yeah, Chris.
Are y'all seeing this here? By any chance? Y'all with me here?
Yeah, we see it.
Wheat, 63% over the month. Heating and oil, natural gas, stuff like that, 57%. Brent oil, 40%. WTI, 37, basically 38%. Corn. Now, this is that GMO corn, too. This ain't even a good corn. This is that GMO stuff, that radioactive stuff they got over in Powder Spring Road down there in who people who familiar with, Powder Spring Road in the DC region here. Feed of corn, 16%. Silver, up 15% down there. Natural gas, up 13%. Platinum, 12%, right? Gold, 11%. Sugar, right? Look at copper. The only thing that's down is what? Coffee and cotton. Go figure. Why? Because they ran hard what previously. They've been running previously the last couple months or so. Could make this stuff up. Now, a lot of these things, and this is not everything. Now let me see. Let's go to the bigger chart. Let's go to let's go do the let's go do softs, right? Let's go do softs first. Right? Yeah. So let's go. Let's see which ones I want to do. Let's go look at those just highs and lows. I want to do real time. Futures quotes, get out of here. You seeing popped in the building there. Let me see. Let's go to what is that? It's commodity indices. I forgot where the that's the main one, right? For the indices itself. Which one I want to see? Let's do it from the let's see the futures one. All right, I'm then this is raw data, guys. No more, no less, right? Raw data, right? Okay, that's the right. I'm trying to be on it. Hold up, my bad, guys. I'm over here tripping. Let me go to trying to find the one. There we go. I'm like, why am I tripping? Where's my list at? All right, so let's go to the main one, right? So this is everything, obviously, on a what? On a real-time price performance value here. You see price, you got performance, technical, specification, candlestick patterns, right? We're going to performance, right? I'm showing you guys this is how you go find this data out in real time, the organic data. So whatever number they throw at you, you've been tracking stuff from month to month. You're saying, okay, well, what does this look like, right? What does this look like? Okay, well, this is another way you can track this stuff organically, right? Y'all with me here? Where my family? Okay, y'all with me on YouTube? All right, let's go. All right, let's do this here real quick. We're gonna go to the performance tab. The performance tab gives you what? Everything, right? So let's look at this here on the performance tab, right? Let me blow this up on the YouTube side of things, right? Let's do a full screen visual here, right? Full screen visual here. All right. Now let's go back up to the top. So you see what? Daily, 1 month, of course, 1 week, right? Year to date, 1 year, 3 years, right? Now, just looking at this from this perspective, just naturally, one would look at this and say, man, commodity prices have been banging. Boy, soy, corn, rough rice, lean hogs, feeder cattle, gas, London coffee, London cocoa. I mean, the whole nine, lumber, oats, oranges, sugar, cotton, ripping. A lot of stuff has been ripping. All this green up here, all this green. But we're talking about tracking the CPI data from month to month, right? So we're going to go to the monthly tab. Let's put in what monthly tabs look like over the month. Why? Because this readout tracks what happened from 1 month to the next, right? So since a month ago, right? So it was all good just a month ago, right? The song was all good just a week ago. Since a month ago, what do y'all see right here? Don't look like them prices coming down to me. I mean, I could be wrong now. Look at just 1 week alone, nickel up 222%. The daily today went up over 68%. I think over Chris posted something on nickel. There's been a lot of people on YouTube posting about nickel lately. Nickel took over where palladium left off at. Nickel is running rampant. Now, nickel is also used in what? Inside of the EV batteries as well. Filaments and all that stuff that they use, right? It's good for what? Fixtures that they use inside of, home uses and stuff like that. Furnishings and things of that nature. Nickel is, widely used for those kind of things. It's up to date on the month, 250%. And I would say that nickel is an ancillary metal, right? It's a ubiquitous metal. I would say that. I would say so. Nickel goes into a lot of different things that you use in your everyday life. So yeah, I would look for that as another an organic readout in terms of CPI. Keep in mind, because commodities are the entryway into products that you utilize. These are the raw materials, the real, as the woman say. As they say in the hood, your favorite rapper, right? Like you like Home Depot, right? Y'all like Lowe's, right? Well, guess what? Lowe's, that may be your favorite little store, but Lowe's love these scenarios over here. The cost of these goods and services. This is how they make their money, or don't make a lot, unless they got pricing power. They can price you out. Y'all get it. Look at here. London gas, 63%. U.S. wheat on the month is up 63%. Heating oil, right? Natural gas, other stuff like that, if you want to say, right? Just heating oil as a whole, 57. 40% on Brent oil, 40% on base, say 40% on U.S. gasoline. Palladium, 39%. Crude oil, 37%. Soy, dang near 18%. Corn, 16. Zinc, 16. Lumber, okay, these houses right now. Seriously? You're paying an extra 15% per 2x4 per 4x4 per whatever. And you're not even getting the wholesale number unless you got some, builder's license or something. You're getting the retail markup on top of that. Lumber's up 15%. Silver, we talking about building a house, 3,000, 4,000 square feet, 2,000 plus square feet, and you paying an additional 15% plus. That's not even the retail price addition for that square footage. Okay, yeah, I'm sorry. Inflation is going down. It's starting to abate. My bad. Okay, yeah, moving on. Silver goes into a lot of things. 15%. Lean hogs, 14%. I saw somewhere people say that lean hogs is the new technology stocks now. That's the new tech. Is big tech is lean hogs. Right? Natural gas, 21%. Oh, excuse me, 13%. Right? Gold, right? Towards the US dollar, 13%. Platinum, 12%. Base 13%. Gold outright, right? Look at here. Up near 12% on the month. I mean, could make this stuff up. Aluminum still ripping, right? Aluminum been on a terrace. It's just been another 9% on the month. Rough rice, 6%. U.S. soy, right? Again, stay away from that soy. All right. Anyway, soy, 6%. Sugar, 5%. Copper, 3%. I mean, y'all see it. Copper, U.S. I mean, y'all see it. The only thing that's down a little bit is what? Oranges. We know about oranges down. I don't know if y'all saw that recently. They had a report that they had what? Bad crops in Florida. That's the only reason why a lot of oranges prices down. Live cattle, all this stuff right here been ripping before this month too. So a lot of these stuff is just starting to kind of pull back a little bit. Because y'all know we're talking about cotton literally about 2-3 months ago. And it was peaking. And now all of a sudden it's just pulling back a little bit now. So just having rebalancing, people going into other commodities now. That's all it is. US cocoa pulling back. London Robusta coffee, same thing. London coffee pulling back. Feeder cattle, right? In this perspective, right? Feeder cattle futures pulling back. Coffee, right? And a lot of this stuff probably actually got more so to not necessarily do that. These are just weak. It's just it has to do with commodity, supply chain issues too. Manufacturing, processing, all this stuff is all disrupted because of other means. So it's not even that they're not even, great commodities. Just they pulling back because of other issues possible. Oats. But everything up here that really matters, like your house and all that stuff like that, just gas, but food, a lot of other stuff too, still ripping. Organic readouts right here. Cost us $3.99. Let me post this over here on the YouTube side of things, right? We're gonna make sure y'all have this stuff right in y'all little right in y'all archive folder. What's going on family? Manolo in the building, right? Family Sadar Samuda in the building today. Shout out to the family. Over Zane Montego in the building today. Shout out to the family coming through, man. Got the family coming through. Over Rams in the building. Shout out to you all today. Organic readouts, guys. This is how you track CPI data in real time. And that's before we even go to the Fred, because the family here already tell you I go straight to the Fred, right? Pull up this data too. Right. So again, just an organic way to track what you're paying for, inside your everyday, spending habits, this, that, and the third. This is how you track this stuff in real time. You're taking the role of an executive. Let's go. Let's not be confused. Now we know that America, boy, they'll cook some books, right? They talk about China, but boy, they will cook some books too now. But for the most part, we know that spot prices really detail what the global commerce is dealing with as a whole too. So they're more believable readouts in this form, as you see on the screen, than what you would get in a completed, Excel spreadsheet or just that PowerPoint that that'll come out the BLS, right? That may come out of the the feds when they put their stuff together, whatever bureau labels, then the Fed themselves in terms of tracking that through the Fred itself, Federal St. Louis. Again, whatever, they can cook things when they get to that point. But these numbers here, this is day-to-day what people putting their money where their mouth at, or the value that these people who manufacture these items, who cut them down, who digging them up, who processing them, who going through the metallurgy, all this stuff. This is the real-time spot prices. See, they can't cook this stuff like that, not in this form. The only way you cook these numbers is if a big fund manager come in and just buy the stock up, rip it up, or just try to short sell it to try to bring it down and make it look like it's bad. That's all they can do, and that ain't gonna last so long because the greater market is already kind of detailing whether or not people feeling, a strong sentiment towards a certain commodity over other, and they'll buy it, despite J.P. Morgan, they may be trying to manipulate it, or Morgan Stanley, right? Because they get in trouble all the time for what? Forex, manipulation, metal manipulation in terms of gold and silver. They try to manipulate gold all the time. Why? Because they know gold is inflationary hedge. It's an antithesis to that of what? The U.S. dollar, right? In other words, if the same thing as U.S. equity stocks. So of course they want to try to control it. Whatever, y'all get it. right? So this is the extent of us being in the position of what? Make executive decisions based on learning how to what? Follow the organic data. As they say, it's organic, don't panic. Right? It's organic, don't panic. Right? It's organic, don't panic. Y'all with me here, guys? Y'all, the family with me here? Y'all with me? I gotta, do them sound checks. Make sure y'all with your brother. I want to make sure y'all getting this.
I ain't panicking.
There it is. See, there it is. Right? Good information is hard to what? Overlook. Because you got to know how to what? As we say, you got to know where to hunt, know how to fish, know how to string up a line, know how to what? String up a bow and arrow. If it come down to it, you got to learn how to make your own hooks, right? Learn how to dig your own baits. You got to learn how to get your own wood off the tree. Look here, y'all get it. We teach people how to what? How to survive properly. Artisanal way, the artisanal way will always beat the manufactured way. Best believe that. It's like, your grandma cooking. When grandma put her hands in that pot, you know what time it is. Your stomach gonna start growling from the moment she pulls some out the fridge until she done, because you know it's gonna be. Your body already trained for that good, because it's artisanal. Grandma hands go in there, shucks, it's a wrap. You already know 3-4 hours from now you're gonna have the itis. You're gonna be somewhere lumped over, struggling. Can't even move, Riley. Right? Swole like a tick. It's the same reality, guys. It's the same reality with this information. You got to know where to go. You got to know how to read the artisanal value of this stuff, right? You got to know how to fish, how to hunt, how to have your own research methodology. What's going to over snap ball in the building? You say, many people got rich during the Great Depression. Somebody going to get rich this year too. Why not us? 100% right. 100% right. And if not this year, next year, it's no end to sight. Why? Because there's no what? There's no cutoff to this. There's no timeline that you have to, do this or do that. You just have to be what? Faithful and building up your what? Your skill set, meaning the intelligence of learning how to what? Track the markets, how to read the data. Essentially, that's what we do for a living. I keep saying that we're data house, right? We get paid to, ingest information, output, corrective information, how we can utilize it inside of our asset. Apple or Facebook or Microsoft or Micron, whatever. It's the same reality. The broader picture and the micro. The macro and the micro. You're taking on the role of economic professors in your own right to share this with your family, your friends, whatever. Get consistent at being able to do good things really, really well. Right? It's about basics. It's not necessarily home runs all the time. Getting on base. The rest will what? The rest will be history, quote unquote. Right? We live for this stuff, guys, for a reason. Right? We built for this. Right? We're built for this, guys. We're built for this. Right? So that's why I say your risk profile, of course, that matters to you and your pockets. But for the most part, as long as you know how to read this stuff properly, that's all that matters. If you're going out there and you're going to buy the dip, make sure you're doing it with a game plan. Not necessarily just because you feel like the market is cheap. Have a game plan, because things can definitely go get cheaper. Have we not seen that consecutively in this marketplace? Consecutively. And you got stocks like Tesla. Like you look at Tesla, right? Of course, I'm a big proponent of Tesla. I like the tech, right? I'm not a fanboy, but I like the tech. I have a high impression for Tesla, but I'm not I'm not a fanboy. I understand the value of it, that this could be a revolutionary stock like an Apple at some point. But let's go there. Let's talk about it really quick here. Let's go there. Right? Let's go there. Right? Tesla. Same way, I put a resistance bar on Tesla at around the same area here, around my 880. Here's your resistance. Until you overtake 880 again, forget about it. You already got a flogging of Tesla that came down to 700 because of the kickoff of the war. Now, if you look at this right here on an organic perspective, what does it look like Tesla doing right here? Right? It's struggling. It's trying to get outside of this potential double bottom. It's trying to fight against the potential dead cat bounce, right? It's fighting tooth and nail to back testing this 700 point. Now again, higher interest rates. We just got data that came out recently, literally, I think yesterday or today, that EV sales in China is starting to slow. It was picking up last month and the month before that. Now it's starting to slow up. Now they still waiting on Giga Berlin, Giga Austin to get in the game. We get it, but again, just understand it. Tesla has already been priced well into the future in terms of its stock price. Its valuation is well beyond what it really puts out in terms of organic revenue. We get that. It's priced to perfection, as one would say. Now, ever since the stock been pulling back, what do y'all see right now? There's your twin peaks right there, 1200, line in the sand. I sold some into around 1100s. I sold some again of my Tesla in around 1,000 point. And again, just recently, literally, Friday, I sold right here. Let me blow it up. Friday, I sold some of my some Tesla, right around here on the 4th. Let me pull it up so y'all can see what I'm saying here. On the 4th, right, I sold some of my Tesla at around 840, 830, somewhere around there, give or take. After that, it pulled all the way back to down here, of course, came all the way down here like 780. Today, we got a pump that came back up there, but just for the trade, I sold a little bit more around this 840 area. Missed selling up here, right? There's a lot of signals here, but I was like, oh, we'll see. There's a lot of stuff going on. I'm taking profit on the way that, in a way that I'm supposed to. I took profit into this pump, up around this point. I took money back on the way after we back tested it here, and it started failing a little bit. I started taking something at around 1,000 point, and I just took a little bit more profit. I'll take around 840. So I'm gonna say, well, why would you take profit here 840 if you already pulled back that much? Isn't it at a point where it can bounce and potentially bounce? See, that's the thing with the market. When you're working with potential or the possibility, the best thing you can work with is probability, based upon the things that we've been training on every day: fundamentals, technical, investor sentiment. What are we doing here? We're trying to price perfection. If it's high for a reason, right? That don't necessarily mean that it's going to continuously ride the wave. We said that with a lot of stuff. We just looked at Firm, Rivian, Lucid. We can down the list. AMC. We hit all of them up. All of them been taken to the woodshed. We've been talking about this like forever. Like this moment was coming. Like we've been planning for this. And that's why I had no qualms with taking profit, into 1,200, up around 1,100 plus, on the way back down around 1,000. And then again, I took a little bit off the table just recently here around 830, 840 area, meaning this past Friday. So, was it Monday? Yeah, it was Friday. I'm actually tripping. It was Friday. So yeah, again, this pullback here down to 700. I was like, okay, count it all joy, bro. Right? Yeah. Actually, down here like that. I mean, y'all saw what it did. It came down here and hit like 700 even. Couldn't make this up. It hit 700 on the dot. Couldn't make this stuff up. So I got 100 point plus, retrace back, and then I, took a little bit out. It's a game of paying yourself too. You got to understand the rules of engagement. Could Tesla potentially go lower from here? I'm asking for a friend. Anybody? Do anybody think Tesla can go any lower from here? Or is it at a point now where we've already reached its support, it can go no lower? Anybody? Can we go lower from here? Or is the bottom end, quote unquote, the proverbial bottom end for Tesla? Right? This is how you gotta, again, you gotta be able to assess risk based upon what's good for you and your scenario. Now, we back the chart out and look at it on a bigger perspective. This is exactly what we're trying to do. We're trying to map out particular perch points, foundation points, support points, where we definitely know 800 wasn't one, right? Blew through it, right? A couple times. We know we came down and hit like 700 on the dot. there seems to be a lot of support, coagulating between 700, of course, at around what? Let me get down here. Around 700, back down towards, 6 and some change. We'll say that at the crest, or at least at that nexus of the R side, excuse me, the VWAP and that of the 20 moving average, right? That separation right there between 620 up towards, let's say, 700. That's a box that I don't want to see Tesla get in, but at the same time, I want to see Tesla get down that low. Because y'all know the words I know. If you can get Tesla at around 650, 630, 680, and start building your starter position, because you say to yourself, how much lower could Tesla go at that point? Knowing that they still got a growth story that's still out of this world. You're not going to fight against that. Make sense? You're not going to fight against Tesla at that price, knowing that, look where it came from. When it was at $25 a share, right? Back during this time frame. Right? Could make this stuff up. Or $7 a share. Of course, this is, the whole split thing. So that's why the chart, I can really read it for what it really is. But, I mean, look at this right here. Or this inorganic. Right? Inorganic, clearly. Right? This last pump right here, inorganic. Right? Clearly, it went straight line. It went up in a straight line. Look at this here. I ain't making this up. Y'all see this here? Is that not a straight line? Or is my eye deceiving me? I'm just asking for a friend. Not sustainable. Some of you hear fun, people who are fanboys of Tesla, like y'all know them YouTubers out there. No shots fired, but y'all know they show a lot of people a lot of what build a good. They had people getting excited and buying this thing up here at 1,100, 1,200, and this. I mean, look, I was watching the show like, yeah, I'm a buyer up here at 1,200. I'm a buyer at 1,100, guys. This is a one in a lifetime perspective, bro. Guys, trust me. I'm literally watching these videos and I'm sitting there cringing like, oof, boy. Good luck, guys. Right? I troll the chat and I'm out. Right? I'm out. Good luck. And now they up here buying at 1,100 and 1,200, and now the stock, came all the way down to 700, down here in 800. Now you got to play the game of what? Put good money on what? On a bad position or a bad entry. Because they haven't figured out how to map out money in perspective to, the context value, what the broader market is signaling, how to play the fundamentals as well and really get a good discount. The game is to buy low and sell high. Not buy high, sell it low, right? Wait till it go high again, buy again, and then get caught and have to buy it sell it at a lower price again. That's not how this works. You got to understand valuations. So again, this is what we're trying to discuss here. And you looked at the price of nickel going up right now. Like they use nickel in a lot of them Tesla EVs, right? The batteries, the car. If that stuff is going up, so yeah, that's a cost that the company is incurring then, is it not? Of course it is. It's putting two and two together, guys. That's what this is all about, basically, my point. I'm not going to beat the dead drum. I'm not going to beat this thing, right? I'm not going to beat this thing to death. You guys are starting to get it at this point. But that's why I said you have to be a steward of the game. You have to be prudent. You can't lead with emotions. You got to be, guys, you got to be patient. I know it's hard too. It's hard. It's hard out here for, right? It's hard. But you know what? Tortoise in the hare theory. Tortoise in the hare theory. Just let that lead you. The tortoise in the hare theory. So yeah, like I said, I'm excited when Tesla get down to the, low 700s, 600s, around that, anywhere around there, I'll get it, get a little excited. I'm not going to say like really excited. I'm just saying a little excited, right? Because now you kind of somewhat in that mid range, right? 500, really around between 400 to 6, around 700. But just for the sake of knowing how greedy Wall Street is, I was thinking like around 600, like, low 600, mid 600s. If you're fortunate, right? Because y'all know, boy, they'll turn this thing. Then yeah, you'll get my attention. Why? Because that's a point within the bull flag here that would have kind of washed out a lot of this froth up here. Right? All these chases up here, it would have washed out all those guys. It's washing them out now. But again, organically, if you come back down here, they'll capitulate down here. I mean, if they bought up here at 1,100, 1,200, 800, not all, but maybe some, They'll start capitulating when they get back down to like mid sixes, high sevens. They'll start capitulating, right? Especially 5 something. Oof, boy, they'll capitulate real hard. They'll give up them shares. Boy, they give up them shares so fast. If nothing else, at the start of what? A new position at a lower price. They'll take the L. At least I got a lower entry now. They're like, man, I should have bought here all a long time ago. Anyway, but y'all get it. So yeah, this is the part where we're talking about. Markets are frothy. They've been frothy. Ain't no secret. We've been talking about this stuff. So all this stuff right here is just exacerbating it. We get it. War and inflation and supply chain issues and the Fed causing all of it, right? Again, gonna put the blame where it really is at. All this cheap money, right? Too many dollars chasing feel goods, cheap money printing, transitory, incendiary talking points from the government and the Fed. Man, these people, man, all right. Straight trash, straight trash, straight trash. Right? But y'all get it again. So yeah, there's a lot, there's a lot out here that, man, still got more to go. Still have more to go, guys. We're not done. We're not done. There's a lot of things out here that we got to, deal with. We got to contest. That's one would say we got to contest with, right? I mean, that's just the nature of doing business, right? That's the nature of doing business, right? And we'll do one more. Look at there. Look at there. Woo, 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 Gina.
Why you
Woo,
think
woo, woo. Oh, what you see right there over Brandon? What you see right there?
Let's go.
Let's go half on the baby. He said, let's go half on the baby. That thing there beyond lower than the half right there, boy. Like, hold on, this ain't.
Hey, wasn't this stock supposed to go to like 100,000? Oh, you lost.
All right. Can y'all hear me? Mic check. Let's see. All right. Let me see if my settings are correct. My whole everything went off like a power surge or something. Right. But I hope Russia ain't hit us across the head. One of them denial of service attacks or something like that. Power grids or something. That's that retaliation, boy. Joe Biden cut the energy, boy. I'm gonna send y'all a dirty bomb and shut y'all because y'all know I'm in this DC region somewhere. So yeah. About that. Let me see here, guys. Everything shut down, like all my trading screens, all that stuff, of course, down. Of course, good thing about being able to trade mobile. So the internet just came back up, Bloomberg TV back on, and the market went down lower. It was the time I was, away apparently. 1 second here, guys. I'm getting all my stuff back up here. Thank y'all for being patient. Y'all know what it is, right? Y'all know what it is. All right, so let's see here. 1 second, guys. Again, I wasn't planning on being on that long anyway, right? Maybe that was the sign. That was that proverbial signal. Like, nah, we know it's deeper than that. Again, don't know what caused it, but then again, whatever, right? As they say, whatever. All right, so let's get this over here. All right, so I got to get all my stuff back up here, or at least some of my trading screens, and make sure everything on the up and up. All right, so let's go. Let's go here. What were we looking at? Oh. 1 second, guys. Bear with me for a second here. I'm getting all my apparatuses back up and popping here. Well, Jack, it always happens. Like right when we get to cooking, boy, here come this foolishness, boy. Here comes that foolishness. Boy, when you get the cooking, boy, they get the hooking. Meaning hooking, tearing up your stuff, right? like y'all kidding me? Like seriously? Y'all want to do this like right now? Like right now? Like y'all want to do this like right now? You're still like, yep, we finna do this right now. Right? Going to end your fun right now. Like seriously, everything just got clipped, like power, everything. It's a good thing surge protectors kicked in because especially with these microphones. So everything's solid over here for as my setup here. All right. 1 second here, guys. Just getting that stuff back situated, if you will. Right, trying to at least. Yeah. All right. So, all right. Time is it 2? And we got what? Oh man, the bell getting ready to ring here in about 8 minutes. So, yeah, we coming up on the bell. And I had a couple earning plays I was gonna try to put on too. Dog, I meant press against the clock. Yep, there goes that. I guess. There goes that. And I'm not finna chase. I mean, some of them already done the research on, but I don't want to just jump out there. Let's see here. Yeah. All right. Sorry about that, guys. Again, nothing I could do about it, of course, but I still got to say sorry. All right. Just feel comfortable saying it. All right. So let me get my mic still back on here. All right. 1 second, fam. Let me get Ober Brandon back in the building here. Thank y'all for being patient. All right. What's going on, fam? Anthony Johnson in the building.
See, Ober, that's what you get for talking that real stuff. They cut your power off to your house.
Whoa, look at him. Stuff, boy, get you in trouble. Boy. It get you in trouble.
They're like, nah, he talking too much. Hit that light switch on at one time. Wow.
All they had to flicker that thing, boy, to kill everything. But it sent me back to the Stone Ages in like 2.3 seconds. But everything went black out in here. Lights, power, everything. Internet, like out of there. They said, but it's out of there. Like, look at this mess here. Like,
He ain't learning today.
You see what I'm saying? Kevin Hart style, right? Y'all gonna learn today. You mess with these people you want to. But yeah, this is just, again, I don't know. I mean, it's weird because this like rarely has that ever even happened, over here, especially where I'm at. Not to say it can't, but of course the weather's perfect, right? It's good weather out here today. It's like perfect weather. And it just rarely happens, right? And I got Dominion, right? I got Dominion Energy. I know Dominion Energy is one of the biggest, energy companies on the East Coast, right? Like they got PCG and all that stuff, PG and over there in the West Coast and Edison.
Mm-hmm.
Dominion Energy is like one of the biggest, power companies on the East Coast, especially in, mid East Coast and up New York, up toward, this area. Then, you got Georgia Power, you in the South. So they pretty solid, supposedly, right? So yeah, they about not today site. So whatever they call that, yeah, I'm just gonna say chalk that one up. Right? Chalk that one on up. Because yeah, that was I mean, that threw off everything. So I'm trying to get all my stuff back up, screens up, trading screens, and all the other stuff I had going on. Some of them I'm just not going to even mess with this point because I've already been able to check it from what I needed to do, of course. But yeah, we got like 5 minutes here before the bell, guys. 5 minutes before the bell. What I'll do here, I'll pull, try to pull it back up here. All right. We'll pull the SP 500 back up on the screen here. We'll look at the SP 500 on the way out the door here. We'll track that at least, if nothing else. Because as you see here, look, right back down. Look at that. Woo, Gina. Oh, you bought them puts up there at 425, 427. Because y'all know I got me something around 425. It was like 425, 40-ish. I bought some puts around 425, 40. Again, I closed out my call, right? My call scalp. And then I bought puts around 425. I only bought one though. I typically buy like 3 or 4, but I only bought one. How many reels you want? I just want one. How much for one reel? I just want one reel. One reel, yeah, just one reel. I sure ain't hungry, man. And knowing I probably should have bought maybe a whole slab. Should have bought a slab, boy. God, dog. It's all right. It happens, right? That's the game. That's the game, guys. Look at that thing right now. Woo. All the way back down. And talking about, we almost at the lows. The lows was literally what? What was the lows today? Low like 4. We hit like 415. It was like 4. Hold up. Why is this thing not accurate? I don't know why, because it's got settled. Yeah, 415.13. 415.13 was the low of today. We went all the way up to 427 and change. And now we're coming all the way back. This is a trader's market. This is what I'll be talking about. It's a trader's market. If you guys know anything about, what a trader market is, or what a trader's market is, y'all got a crash course of what it looks like today. Everything we've been talking about today was just right on time, because I was telling people about the idea of, again, nuances of market, understanding how to trust your indicators. Of course, everything we do in far as our training sessions, it seems to be always affirmed or confirmed when we go into sessions like today. And we're front running a lot of this stuff in real time, and what's going on with Russia and what's going on with the administration and policies. And we're front running a lot of this news, guys. And again, for what it's worth, call it good time and whatever, this stuff just gets affirmed literally with the next couple of trading days or a week or whatever. Nonetheless, we're at a place where we need to be. We're at that place where we need to be as investors or traders. Why? Because a lot of this stuff isn't happening in real time. A lot of people don't know how to track this stuff in real time. That's why these kind of conversations are important. And it's not that, again, that we are claiming that, that we know more than the next person, because we show people every day. This information is what? It's ubiquitous, right? Anybody can pull this data up. Anybody can pull this information up. We show you where to go, how to get it, how to read it. We just talked about CPI data, how to read organic, numbers of the CPI. Go to the investor.com, go to commodities, look at everything that's going on there. Put that month-to-month ratio up. There you go. How you going, whatever. And this just in, guys, breaking news. Pepsi company, PepsiCo, they're going to now suspend all their brands in Russia. So no more Pepsi, no more Frito-Lay chips in Russia right now. Couldn't make this up. See, this is that cancel culture foolishness. That's that virtue sick. This is that goofiness I've been talking about. This is that goofiness. This just in, Pepsi now is the latest corporation to pull their products or suspend their products in Russia right now. Again, keep in mind, this stuff gonna hurt their what? Their revenue. Now they're gonna say, well, it's only a small portion. People always gonna say that. So American Express, Apple, all these companies, they just shooting themselves in the foot by following the administration lead. They think they actually doing it what? Now keep in mind, they're doing it not despite Putin. Now they punishing the Russian citizens, right? They got nothing to do with this. They punishing them too because of their leader. Tell me that ain't insidious. That's like you being punished today for something that your family might have did, 20, 30 years ago. Or they could have did it just yesterday. They didn't turn around and punished everybody in the entire house. Like, how's that legal? How's that even rational? You're getting punished for something that somebody else did inside your house, right? Again, this is y'all get it. I'm just saying, hey, all right. There goes the bell, guys. There goes the bell. It is 4:00, guys. Look at the market here, guys. Look at the market. You came all the way back down to the lows, and we're going lower. Look at here. It is after 4:00. Here the market back at 415, 460, 450, and sitting there still coming down here in the after hour session. Y'all see this here? Do y'all see this foolishness here? Look, they say, look at this foolishness here. Moments like this remind me of the old Richard Pryor back in the day. Boy, you ought to be ashamed of yourself. I ain't lying, Junior. Moments like now. Like, you couldn't make this stuff up, guys. It's so pathetic. It's so pathetic. How many people got trapped today? How many people bought the market up here at 425, 426, 427, 424? How many people bought calls long or bought the market long at around those prices when the market was just what? Look, and it's gapping down. Look at this gapping down. Look at the gap. How many people buy and didn't take profit? They didn't take profit up in here. They didn't take profit up in here, up here. And they probably rode it back down, probably bought some more calls, probably around here. Went back up. Oh, we're going back to the top. Then guess what? Young. Look at this stuff, guys. Couldn't make this stuff up. This is just brutal. This is just brutal. This is 100% brutal. So let me ask the question again. Sorry about that, brother Anthony Johnson. As you saw, we had some technical difficulties, right? All right. You say, how do I get better on fundamentals to have a better understanding of markets? So fundamental analysis is very much turnkey in more ways than we give it credit. What do I mean by that? As a consumer, you already understand some very basic elements of what research methodology when you start doing what price comparison, right? What the competitors scenario look like, who are the competitors out there. Again, some of the stuff we talked about for us, what commodity pricing, how to go check the price of commodity, whether or not that's going to be influence on whether you're paying high margin value for items, in its finished and completed state, as a SKU at this point, right? Package landed, put a SKU on it and sell it to you at a margin markup. Well, you can track that stuff backwards by going through what? Competitive value, price comparisons, comps. If you're in the retail space side, they do comps. Commodity, again, the commodity chart that we looked at, like if cotton, if you buy a shirt, a pair of pants, and what's the going rate, what's the tax rate, what's your taxation rate within your state, your local jurisdiction. That's another understanding of that. And what I'm saying, just by learning how to do that stuff on a basic scale, is you learn understanding the value of fundamental understanding of what it takes to produce a good, right? To produce an item, so to speak, right? It lies into the point where when you start thinking about the company, what is that cost that the company is incurring to produce this product, right? Where are they sourcing the material? What's the going rate for spot price for cotton, for shoes, for metals or whatever? That's a part of fundamental analysis. A lot of information is already neatly packaged and put out there for you, without you having to feel like you got to go to MIT or some, school of, economics, like the Wharton School of Economics or something, right? You don't got to go to those institutions, Harvard, Yale, none of that stuff to learn this stuff. But that stuff is very important. Why? Because you're talking about what? Revenue or the lack thereof, right? Liabilities, right? Or the lack thereof, debt to equity ratio, EBITDA, right? Earnings before debt, interest, and tax amortization, right? and the other would be what? Debt before what? Amortization. All those things matter in terms of margin, right? Meaning whether or not a company, is benefiting, right? Benefiting, right? On margin or not, right? Or whatever. Or at least having margin or pricing power, you want to say. If they have to incur costs because of inflation, guess what? That means they can pass that cost on to the consumer if they have the type of products that they know consumers are going to line up to buy regardless. Because if they are ubiquitous items, then people are going to have to buy them regardless. Toilet paper, right? Paper towel, most of your foods, right? Staple items, toothpastes, stuff like that, right? People are going to pay for it, one way or the other. TVs, that's another thing. That's discretionary. But you can still track that by being, based upon holiday shopping blitz, whether those units are being moved, being marked down. It's a lot that goes into it, but that information is very, in my opinion, it's very, very turnkey. Boy, look at it. We got some earnings out right now. We got some earnings out. Look at here. We got earnings out on one. I hate to cut that mid-sentence, but I got to I'm going to share it over on my screen here. But I'm going to keep talking about that. But that's how you go about it. And then there's paperwork that you can, and I say paperwork, meaning the SEC filings, right? It's the SEC filings that a company has to put out, right? That's also, those are also, again, breadcrumbs, so to speak, to let you know whether or not a company is performing up to that of their guided standard, their future value of growth, right? Or the lack thereof, based upon them having issues dealing with supply chain issues, what we know the entire globe is dealing with to a degree, especially us. The cost of supplies are going up, right? That means that's going to cut into their revenue, which will hurt their margin, quote unquote, right? Right. So a lot of different moving parts, right? A lot of different moving parts. So again, it's just an extension of learning how to track all those different things and go through it. You got to go through it a lot of times. So it's not like a one and done scenario, right? Because you learn how to basically read a business, right? You learn how to read the blueprint of a business or a company, right? When Apple put out numbers and saying, we may have to reduce our price of the iPhones because of this, right? As opposed to raising the price because they make more money, right? Anytime you have a reduction in price, it has to be one or two reasons, right? Number one, the units ain't moving fast, right? They ain't moving enough. So now you got to cut the price and take the L. Or that business is really good, and now you can You can get a better price from your wholesale supplier to offer the product at a cheaper price in order to move more units. Make sense? And in that case, it's a very binary scenario, right? So again, those financial reports, so right now, Stitch Fix has earnings tonight, as you see. Stitch Fix is coming down here in the after hours, right? We already down. I mean, man, well over about 20-30%. Goodness. They had earnings tonight. Let's see what it is. Right now they're down. Excuse me, about 15. I was about 20-50%. It's just $9. So right now they're down around about 15%. And I'm saying on a bigger time frame course, Stitch Fix has just been bleeding. Right. Let's go to the 5-minute charts. You see what I'm talking about. Right. Let's go back here. Let me show you what I'm talking about. Let's go back to COVID. Right. Let's go during 2020. Right. Let's show you Stitch Fix. Let me show y'all Stitch Fix. Y'all see this right here? All this was hold up. Hold up. It ain't let me go back because I knew it was going to do that craziness. Let's do it this way. All right. Let me show you this. I got to show y'all this stuff. I get a kick out of this kind of stuff. Y'all know me. I like this kind of stuff. All right. Hold up. This is not giving me. Oh, there you go. Let me go back. I'm like, why is this thing not flipping? Because I'm using the daily chart. All right. Look at here. Here's Stitch Fix, guys. Y'all see this right here? Now, fundamentally, right? Just using that whole conversation, right? Helping my family Anthony out right now. Over Anthony, right? This right here would be a clear case of what we're talking about. A rising tide lift all boats, right? That narrative coming out of Washington, straight horse malarkey. Right? There's another thing called horse malarkey. Straight horse malarkey. See right here? Couldn't make this stuff up. Their business model is what? A subscription clothing business. A subscription clothing business. Think about all the costs that it's going to take, marketing, advertisement, to be able to offer clothes online. Now, the only caveat is that they don't have a brick and mortar. They don't have to deal with the overhead of a what? Brick and mortar, right? Insurance liability, stuff like that, employees. They're running this stuff strictly from a warehouse perspective, right? What's going on? Over Rich be in the building, over Sunday then came in the building. Shout out to the family coming in the house right now. In the back of the day, happy to have the family in the building. Subscription as a service as a business model here. Again, subscription as a service business model and clothes. Let me ask y'all a question. When y'all go to buy clothes on average, especially if it's something new, unless you try it out, you know what it is. But if it's something new, would you rather try it on first before you buy it? Or would you just order online and just when it show up and you just like, okay, this should be my size just based upon my measurements? Most time you want to try it on. Now, because of COVID, a lot of people didn't have that luxury because you couldn't go out. You was quarantined. So services like this did what? Services like this boom during that moment. Why? Because you still had to get items that you want. You want to have the least the feeling that you still have some kind of value of what? Sovereignty, right? Even though the government shut you down, guess what? Bam. You start still buying clothes like this. You had a subscription service, made you feel good to put on clothes and just hang around the house, I guess. But nonetheless, this company boomed under the pandemic. Look at it. This is 2020. The COVID lows, Stitch Fix was down to like $12, $11 a share. In came what? Online commerce expansion, Etsy, Shopify, eBay, Amazon, all those companies boomed during COVID, especially during the quarantine. Stock went from basically $11 all the way up here to what? Basically $1.20, close to it, $1.15, and now it's all the way back down to $8.70, lower than the pandemic lows of $10, $11 a share. Instacart, right? DoorDash, right? Even though DoorDash still has a better use case than these companies, but y'all get my point. What's the use case here? To pay a premium for clothes that's coming to you, unless you already a subscriber and know how they clothes fit, all this, that, and the third, and you're just comfortable with paying that higher cost. You ask yourself, okay, why would I still pay for that when I can go to a store now that's been hurting because they've been shut down forever? Even with inflation, some of these stores still offering discount because they got all this old inventory that was just sitting during the time when the entire world was locked down. They got to get rid of some of the old inventory. Think about that. So prices are definitely what? Weird because of inflation, but also for the fact that people got all the extra inventory, they got to get them prices down. I mean, or at least get that inventory moved is my point. They got to get some of that inventory moved. See, this is how you track this stuff. So you see people bragging about, oh, I like this company, and just when you walk by somebody, it's about talking about, oh, girl, you shop at Stitch Fix, and you be hearing women talk like that, and you be like, boy, if they only knew. Really, they're gonna need all your dollars. You better stay subscribed to them too, because they struggling. Look at in my southern voice, they struggling with the K, SK. They struggling right now. Straight struggling. Look at that. $1.15, now you down to $8.70 a share. So I'm gonna use that same thesis we were talking about today. Somebody was buying this thing up around what? They were buying it in the gap up here. They're buying it here. It got all the way up to 100 plus 110. They didn't take profit. Oh, it's going higher, bro. This business model is what? Impeccable, bro. This is the good business. This is the good business, bro. You don't know what you're talking about, bro. Start coming down, bro. It's still a good company, bro. This is just a discount, bro. Buy the deal, family. Start coming down. Oh, bro, this is a deep discount, bro. I'm finna go all in right here, bro. It start gap down even more. Came down to 53. Trust me, this got to be the bottom, bro. This is the bottom. I'm finna load up, bro. I'm finna load up. Woo, to the moon, bro. To the moon. You go lower. Now you're at $40, $39, $40, $38 a share. Bro, look at here. I've been buying on the way down, bro. This got to be our return, bro. We finna go all the way back to 100, bro. You start rising right here. You get back up to $67, $68 a share, $70 a share. We back, bro. We back, right? And guess what? Start coming right back down. Man, I don't know, man. Something wrong with it, man. It's the economy fault. It's the economy fault, bro. It's Joe Biden fault. It's Jerome Powell fault, bro. Man, it's everybody's fault, bro. It's somebody's fault. You lose VWAP here. Oh, bro, man, look, bro, man, this is just crazy, man. Somebody get the SEC involved. Somebody call SEC or somebody, man. This is illegal, bro. What they doing is illegal, bro. They doing a ladder attack on my company, bro. This is short sale manipulation, bro. They just short my stock. man, this is illegal, man. This stuff is, man, this is, now you're $8.80 a share. What's your excuse? See, this is what makes us different. Why? Because as everyday consumers ourselves, if we know products more than they know most of these companies or the marketing and advertisement crew of these companies, we know more about their products than they do. So a lot of times they have wrong people in the right positions, and they need to get the right people there. You guys could do a lot better than some of these people do when it comes to understanding how to read these markets. And then their business model again cost them a lot of money to advertise, to compete with companies like Amazon and Williams Sonoma. Now, keep in mind, a lot of these people got different omni-channels, right? They're omni-channels that they were using because of COVID. Like they had to create omni-channels and stuff like that. You couldn't make this stuff up. They went to online too. You think Kohl's didn't go to online because of COVID? You think Macy's didn't go online because of COVID? You think a lot of you others come and your whole business model was straight online. But guess what? Now you got people that got old school vintage brick and mortars, and now their patrons have been forced to shop for them online now. You think they're gonna go to yours and have to pay a subscription fee and a higher premium price for your clothing, as opposed when they go online and go to Macy's and get it for potentially even a discount without a subscription price, without a subscription as a service price. You just go shop online like you typically do. I'm go buy me some clothes online. I'm straight, bro. See, a lot of this stuff y'all already know. I keep telling y'all got a lot more market skills than y'all give yourselves credit for. A lot more. I missed that question. I'm sorry about the over snot ball. You say how many candles can you have between your twin peaks before you decide if it's a twin peaks? Well, again, we talking about double tops, right? So we use that case. Let me do this real quick. 1 second. We talked about what just happened recently with what was that stock? What stock we were looking at? Well, Tesla was one. What was the other one? Let me see. Let me go to the one that has a very profound. Well, let's go back to Tesla. Let's go back to Tesla. Tesla has a very profound double top. We're talking about false double tops, right? Let's go to the daily on Tesla, right? Let's go back. Let's go 2020, right? I know I should have been on the daily chart because it's not going to register. Let's do it this way. All right, so let's go 2020 Tesla, right? Let's go 2020 Tesla, right? So look at here. See right here? Now, a lot of times you can't really detail how long it would take for a company to have what you call a back testing moment, because what this is called back testing or confirmation, right? A form of confirmation, right? As you look at Tesla here, of course, it peaked up here around what? Near 1,200 something, near 1,300, right? We instantly had a pullback, right? We got a gap that happened opposite right here. So it's an air pocket in the market right there. We talked about air pockets, right? This air pocket at around about 911, 900, right? 920, whatever. You pull back, you close that gap, because in order for you to make a new high, technically they tell you, and fundamentally, they said you got to close the gaps underneath you, right? Air pocket, right? That way you have true price discovery from that point forward, right? There's no kind of unspecified money that's not accounted for, which comes in the form of a short squeeze when you have a gap up. It's an air pocket in the market, right? It came back and closed that gap right here. I mean, couldn't make this up. It came down and closed that gap. So now all these people here that got shaken out, true price discovery can begin to happen now if there's another buy the dip culture coming in based upon, again, the market being able to wash out a lot of the what they call indecisive or paper-handed traders, right? Now you go back to test that potentially test that old high. You start squeezing here, you start squeezing here, you hit a point of a nice little flag, you pull back a little bit here, consolidate it, right? Clear bull flat there, clear. They got above a moving average here, a marquee moving average, 20-day moving average on a daily. And then you gap up and go test that high again, right? This happened literally on New Year's Eve, right? It makes New Year's Eve it happened. Tesla went up and hit 1,200 and no, not necessarily. It was the day before. Let me see. All right, no, it was on New Year's Day. Excuse me, or the 4th. It was on the 4th, one of them days. Basically, went up and hit like 1,200, right? As you see here, right? There's your double top. Meaning at that point, the Tesla has one or two things to do. It could have a small pullback, consolidate at a new high, right? In this case, they call it what? A higher low, and then go test that point again and break out above it, right? Because that's what you need. You would have to have confirmation of a pattern that's indicating what? Resistance, right? Or indication that there's a resistance or supply zone or a lack of what? Buyers at that point, right? Exhaustion of buyers, as we like to call it. It did not. You pull back slightly, and then you what? It didn't necessarily recover. It closed this gap. Now, there's your confirmation, because that would have been considered your higher low, right? When you establish an uptrend, you establish an uptrend by its higher lows, right? And the same would be for the inverse to what? To what? Establishing what? Downtrend is what? By its what? Lower highs, right? There was your gap fill right here. Literally the next day, the 5th, all right? January the 5th, that was your gap fill. Right there, you're supposed to kind of establish a support, at least at your moving average, which was right in line with that. It did not. It broke below it, came back, tested a lower point of that, and broke and went lower. Now you're starting to establish a what? Patterns of lower high, because at this moment here in this U-shaped pattern here, that one you were supposed to make your breakout. If you didn't do it here, it's supposed to come in the form of you what? Regrouping, collecting your gang members, right? Everybody get your pitchforks, knives, your BB guns, your pellet gun, go back out in the front line, and then make that push to go overtake that what? Their resistance, right? It did not happen. From that point, you made a what? A lower high. Off the what? Up here near the all-time high. Therein lies your what? Confirmation that you have what? A double top pattern. Therein lies your confirmation. You have a double top, has now been what? Produced, which denotes a bearish signal. Everything from that point on is bearish until what? Until what? Things change, and nothing changed. Material, if you got short here at 1200, you wrote this thing all the way down, all the way down, all the way down here to 700. Let that marinate. 500 plus points on Tesla from January the 4th to essentially where we at now, right? Literally, basically end of February, somewhere around near the end of February. So about a month, near 2 months, this stock pulled back $500 a share. 500. Let that marinate. Woo woo woo, Gina. Woo woo woo, Gina. Now, and I'm a Tesla bull, meaning I like the company. I like the company, though. See what I'm saying? But when I say I like the company for the reason I'm supposed to like the company. What does their potential growth story look like? Not the fact that it's just Elon and just, I like the technology too, but I'm still what? Prudent with my what? My decision making when it comes to my money. Why? Because I want things at a discount. I'm a black man. All right? I'm going to use my black card on that one. I like things cheap. Give it to me cheap if I can. Now, I pay for what it's worth if it's worth it. But at the same time, as an investor, of course, I want it at a cheaper price. Who wouldn't? Rocket science, right? In that regard, right? This is the reality here. So you got to learn how to, again, price, price perfection, or price the ideal of what perfection would look like at the most cheapest price you possibly can. And in this case, guess what? All right. If Tesla really began to take off, look right here. See right here. I'm gonna show you right here on this chart. See right here? This is when Tesla began to break out. Literally, couldn't make this stuff up. At around 770, 780, 760 area, because it's at that point, guess what it did? It's separated from the moving averages, right? This one, the price action even showed it. Look right here. See? Right, they say numbers don't lie. Look right here. Look at the price action, the volume prices in between this area right here. All that there, right there, with just organic, pure buying as a frenzy. Look at the RSI. Everything that's shaded up here in this white color, that's overbought territory. Look how long it remained overbought for the longest, up until its all-time high. Couldn't make this stuff up. That was the buying frenzy coming off the back end of basically the month of October. It just went ballistic. It went, as they call it, ham, right? Young folk call it, it went ham. And it's separated from the moving averages. Now we're going to use our old school technique. What is our old technique? Anybody that's on the panel here, what do we say? Moving averages act like what? What do moving averages act like? Anybody?
Magnets.
They act like magnets. Polarity matters, right? That's a t-shirt moment. Just like, what do you mean by that? You some kind of scientist? Like, yeah, I'm a money scientist. You don't know nothing about that. Right? Like, what do you mean a money scientist? What's that? That's, don't worry about it. That's how you pay great. Moving averages act like magnets, bro. They act like, man, 100% right, open snout ball, right? Moving averages act like magnets, guys. This stuff ain't rocket science. right? Easiest way to look at how to be able to kind of track this stuff. And again, we share that with people all the time, how to track it, how to assess it. We go with this stuff religiously in our training sessions, right? To get people to see exactly what we mean. Look at the separation here. I'm going to show you. See right there? Look at the extent of that circle right there, right? It's going to be a minimum over, but look how far it's separated from its moving average. From this point where it bent and went straight up vertical, this part where it kind of slightly pulled back and shot and went higher. And guess what right there? See right there? That's your peak. Well, how do we know that's the peak? Well, hindsight's 2020, right? Well, guess what? That's why the indicators are there. I always tell people, trust your indicators. Do I not? I always say trust your indicators because they're going to give you an inside picture, especially on a trading perspective, daily, again, hourly, 30-minute, 15-minute, 5-minute, 10-minute. You can see what's going on in real time, right? Thank you, Oba Snotball, for that. Thank you, Oba Snotball, for the donation, family. Thank you for that. Peace, power, profit to you, Oba. Thank you for that. Humble. So let me show you what I'm talking about. We talk about this stuff again a lot. It ain't even a secret at this point. And I've shared this stuff with people who've been trading for 20 plus years. I'm not lying. Some people who new to the game, and they say, you know what? I never really thought about it that way. They have an epiphany moment right then on the spot. I'm not lying when I say that. I've had people. I did it. I showed this one guy this here in passing. I was just out and about, and the guy looked. I said, you know what? I'm going to show you something here because they were talking about investing, whatever. I said, I'm almost guaranteed that if you look at the market from this perspective, you'll learn how to obviously, price, opportunity in the markets when things are getting ready to get overbought, or they're, at this point when they're oversold or whatever, just by relation to just, looking at from a technical perspective, beyond the fundamental story that may be a kicker to cause the market to go up or come down. Let's just use a very turnkey, vantage point from an optical perspective, right? Look at your moving average. This is a 20-day moving average here, right? On the screen here, right? I'm on the daily chart you see here with the D. D1, that's daily chart. Daily at the top right there, where it says Tesla. Again, when the market began to stand up and just buy Tesla as a frenzy, never mind the fact that look at all the volume came in the green volume bars down here. Never mind the fact that the RSI was above 70 overbought literally from what? October the 8th all the way to November the 8th, the entire month of being overbought. And even when it was still coming down, it was still overbought. Couldn't make this stuff up. It was overbought when it was coming down. That lets you know it was well above its natural price range, value what it was. The VWAP sitting down here at 600. The 200-day moving average, I guarantee at that point on Tesla was maybe around like 700, somewhere around there, maybe right around. I don't have it up on the screen, but I'm sure it was around that price. 20 moving average and the 9 going to be more for closer day trading perspective, but nonetheless, still use the same mentality. Look at the separation right here. That separation between that point, that's all I can see right there. When I start seeing it starting to go vertical like this here, first thing I start doing, now this right here, I could look there and say, you know what? Okay, with vertical here, we should have a pullback here instantly. Why? Because look at the separation right here, guys. See right there? That's your separation of degrees right there. I'm talking Masonic talk right now, right? I'm talking that large talk right now. Watch out, plumb line and square, right? When plumb line and square family in the building. Look at your separation of degrees right here. See right there? That little small oval, a circle, theoretical circle I'm drawing here, that's separation. That's too far away from your moving average. Moving average, that polarity going to kick in and pull that stock back towards it as much as it can. Now, it necessarily means it's going to come back down and test it. Doesn't necessarily mean it's going to come back halfway. It's going to say at some point, you're going to have a moment when the market does what? Whoa, okay, there's your extension here. Okay, we got to pull you back some. So guess what? It pulled back from literally 1,100 all the way back down to like 1,000, a whole 100-point pullback on a daily chart at that. This was a daily chart. So one day Tesla lost $100 per share. If that ain't volatile, you tell me. Like, how do you, as an investor, like think that's normal? You lose $100 in a day? Now, was that a fundamental reason why Tesla lost that $100 a day? Or was that a technical issue how Tesla lost that $100 a day? Anybody, go. Was it fundamental, right? Or was it technical? Or was it a combination of both? I'm just asking for a friend. Right? Now, we can go back on that day and figure out whether or not they had news that preceded that day or came out on that day. That will be our fundamental what? Our fundamental analysis. You with me there, family Anthony? You can go check literally that day, right? Which was, in this case, October the 22nd. Oh, excuse me, October 25th, actually on my birthday, right? Hot dog. Look how y'all do me Tesla, even on the brother Earth Day. Stock pull back $100. I remember it too. I'm acting crazy now, but essentially that's what it was. We can go back and check the news reel on October 25th and see whether or not Tesla had any news on the stock. Meaning anything materially, fundamentally wrong about the company that day that caused the stock to pull back. And or could it have been just again a technical pullback because it got extended away from moving averages? It got too frothy. The stock pulled back because of what? Technical. Hit a supply zone, hit a resistance point, whatever. At that point, it was no resistance point because what? It was a complete price discovery. We had all-time highs, never been here before. That's what they call price discovery. Now, because you don't have a marquee point, you can look on the chart and say, well, we've been here before. This is going to be support resistance. Now it becomes purely just learning how to read level 2, right? The bid and ask, basically, when buyers coming in and going out, what the share structure look like, the time it sells, all the stuff like that, and then you're just playing what? Pure technicals at that point, because that's the only way you can map out price discovery. Never been here before. Uncharted territory. Not rocket science from that perspective. Indicators are telling you at that point what's going on. Extension there, further away here from that midpoint. That's your pullback. After that pullback of $100, guess what? Buyers came right back in and ran it up and made a new high. Same thing here. Look at the extension here. See right here? Now you are up here near 1300. Look at the extension away from the moving average. Here's your what? T line or your nexus point. Here's your moving average way down here. See that extension there? Look at that extension there. Extension. That's your peak. Now, some probably said, well, right here is good enough. Well, it wasn't, because all you did came back and what? Test the old high here. That's your confirmation of a breakout. At that point, that's not the peak point of what? Of the extension. That's just what? You tested the old high, you broke out and went higher. You want that as a bull trader, right? Of course you do. Then you just let it rolled out, right? It rolled out because at that point, when new highs come in on price discovery, as the saying goes, things that are strong tend to get stronger. Things that are making 52-week highs typically try to go on to make what? 52-week higher place, right? Higher points on the chart, right? Because it's strength. You're trading it from a place of strength at that point until something changes. Make sense? That's all it is right there, guys. Cheat code 101. Moving average at like magnets, that's the extension. Pullback was coming. It was coming. Right? Not making this stuff up, guys. Y'all know we talk about this stuff a lot. And this is why it's important of going over this stuff over and over and over and over and over, and to the point where it becomes like, okay, it's sinking in now. Psychologically, I get it. I'm not going to fight against this information any longer. Let me trade it the way I see it.
Becomes your repertoire.
Say it again, over Brandon.
I said it becomes your repertoire.
That's it. So we have this saying that says repetition becomes repertoire, right? Repetition becomes repertoire. This is exactly what this means. This is exactly what this means. Once you see it enough, you'll start what? Acting on it. Right? You'll start acting on it. Thank you, Over Rich. You already know it, Over. Right? We do this together. It's Ubuntu, right? It's all family. It's all love. We're trying to teach people how to eat and how to fish. Because a lot of times, again, y'all know me, I'm not a person to go shade nobody. I don't get on this stuff and go on and bash people and YouTubers. But I will say this. You have to also, wherever you go to get your market entertainment, wherever you go to get your market structure, your discipline, whatever, I will say this. If we're talking about technical analysis, fundamental analysis, anything that has to do with the market, it will be definitely revealed by how people navigate through certain publications, how they break down information when it comes to reading charts. Not necessarily you have to follow my diagram. That's not the case. What I'm saying you have to be able to relate to what the price action is showing you, what the money is showing you, right? All these things that we're being told that we have to do every day to be successful in this marketplace in terms of technical analysis, fundamental analysis, and learning how to read price action or investor sentiment. That's it. That's the three-headed horse, three-headed snake right there. You get those three things down, then you'll be able to do this anywhere on the planet. Anywhere. What's going on, family? Ramirez in the building, right? I say Ramirez, but if Ramirez Heavens, shout out to family coming in the building this evening. If you get those three things down, technical analysis, fundamental analysis, and price action or investor sentiment down, look, you can go in the forex market and crush it. You can go into the options market and definitely learn all the nuances and crush it. Again, whatever you're trading, equity, outright, Bitcoin, crypto, you'll better go into any of these different asset classes and make it happen. Why? Because the market is moving under those that rubric, so to speak. Everything else is just basic price action. It's buyers and sellers. You're in a marketplace. That's what they call the stock market. It's a market of buyers and sellers, goods and services. Even if you're trading it, and not necessarily owning it for longer periods in a day or hour or a minute, it's all relevant at the end of the day, though. Make sense? So again, no more than just learning how to track the money. As we say, follow the money, bro. We say that, in passing when we in different aspects and different community people like, man, follow the money, bro. Don't fight it. Follow the money, bro. Right? If you trade against the money, what's going to happen? That means you got to have a bigger bag than all the other people who on one side of the track. You're trying to go up against all that with your bag. If your bag ain't big enough to overtake their bag, what's going to happen? How that song go? Old school, right? Big bank take little bank. Who matter of fact, what else? Who sang that song? y'all took me there. How that song go? Big bank take little bank.
Was that T.I.?
Who that? And was it T.I.? T.I. Ice Cube? One of them jokers. Ain't somebody.
Yeah.
Who sung that song? Who got the little sign to say big bank take little bank? I think that IQ. I want to say Q, man.
Yeah, I think that's Cube. Yeah.
I'm showing me. I'm back in that era, right? The NWA days. But I think that's what it was. But that's essentially what it is. Is not though? Is that not the market though? Big bank take little bank? I would think so. Right? We looked at the AMC chart. What was that? Big bank take little bank. GameStop gonna look the same way. Big bank take little bank. We just looked at the Stitch Fix chart. What the Stitch Fix chart show? It showed the same thing. Big bank take little bank. Right? Yeah, the Q. He says Q. Okay, yep. All right. That's the market, guys. Big bank take little bank. Little bank is gonna get taken because of what? They're not prepared. They don't know. A lot of times they don't know actually all the rules of engagement. They just chasing. And they've been led by emotion. They've been led by all the wrong reasons that you should not be engaged in the market. They've been led by a lot of those different things. Be it, YouTube personalities, be it bad data, be it whatever. Again, lack of discipline, no true understanding of what's really going on. You name it. It could be a myriad of reasons. A lot of those things are what's going to be their downfall until they learn how to clean that stuff up. But here's the deal. They're taking real-time losses right now, trying to figure it out. As opposed to learning first and then slow walking themselves into the market. They're jumping in head first, straight into a bed of coals. Right? It's a barbed wire. Look at barbed wire. It's a flaming hot barbed wire. They jump right on out there in it. As they say, experience is the best teacher. This is a teacher you don't want to deal with. I don't want to. No, look. That took me some L's in my life too. Look at him. It ain't worth it. That's why we're saying, look, let's slow this thing down. We know there's a lot of people out here who yet to learn this, who want to learn it, but they need the proper way and the proper understanding. And that's why we don't speak fluff over here. We don't fluff up no stock. We don't fluff no stock. Don't necessarily mean we don't have likeness to a certain company, but we don't put no fluff on no stock because I've made it very plain and simple. This is what's going to help protect your money. Why? Because you're not going to come at it from a what? Emotional perspective, right? Again, if you eliminate that piece of the puzzle, that in itself will put you in the game because you won't be sitting out here trying to what? Big up a company or personality, and then yet and still you can't be able to really, translate that into what? A financial gain. Because one thing about the markets, you have to be able to what? Demonstrate and not just conversate. If you can't demonstrate, then you can't really tell nobody how to make it happen. Now, your information still could be right, but you still got to be able to have application too. So we like to say markets are a proving ground. They are. I mean, you have to go out there and show that you can put together a couple of trades, put together a methodology, whatever, and try to make a trade unfold or evolve, as one would say. If you can't do that, that means you ain't following your own advice. So at that point, don't give out the advice. Just say, hey, here's some information that you want to look into. Never take the approach that, no, you need to do it this way. Because when people tell you that you need to do it their way and only their way, that's just what they like. As the saying goes with Cat Williams, what Cat Williams said, that's just, no, boo-boo, that's just where you get your hair done at. That's just where you get your hair done at. Meaning there's more different ways you can trade the market, to my point. It all depends on your time, your money, your understanding. No more, no less. Don't necessarily make their way wrong either. It does not. It just means that where they are in their trading career or their path of journey, it's starting to make sense to them at their moment. If there's things that you still are grappling with and needing to learn, take your time. It's a marathon, not a sprint. Figure it out by hanging out in those environments that where people talking about technical analysis, fundamental analysis. Going to YouTube, pull up the video, get that what they call that chart time in. Get used to seeing this stuff a lot, hearing it a lot. Eventually, it'll begin to take shape. As we say, find your own niche or your own niche, but steal from everybody. Why wouldn't you? This is the only industry ever. This is the only industry ever that pays you to cheat off somebody else's paper. Let that marinate. It pays you to cheat off somebody else's paper. Meaning I can give you a stock. If I've done all the hard work and map the stock out to trade out and say, hey, bro, buy this at around this price here, sell it at or around this price here, right? Or you see me post that in a group like, hey, here's my entry, here's my exit. And you don't know nothing about trading investment. You just came in for the first day. You take that trade like, oh, okay, this person said buy here, and you might want to look to sell it at around here. You take that trade, it work out. You make money. Guess what? You think you're what? Neil Tyson deGrasse from that point going forward. Like, bro, they can't tell me nothing, bro. I got this, bro. I'm finna make a killing. And you go right out the next day thinking it's the same way, and somebody throw out a trade and it's a bad trade. Guess what happened? You take that L, now you got to find somebody to blame. It's their fault. I knew it, but I know these jokers was in here scamming. They're in here scamming. I know I shouldn't have, listened to that person. Nobody wants personal accountability. Nobody. Tragic, ain't it? The world has bred a lot of people who come from that disposition of not knowing, again, proper context, research methodology, discipline, all the things you need to be successful in life that your parents were trying to teach you and share with you. Now you got to go out there and act on those things when you become an adult. Guess what? Boy, look here, it's like pulling teeth sometimes for some folks. They just still don't want to get it. So in this environment here, it forces you to get it. Why? Because if you don't get it, what's going to happen? Your checkbook going to get light. Your wallet going to start feeling very light. It's going to be lightweight, right? They say big, it goes back without saying big bank, take little bank. Because that's what institutions are going to do. They're going to take your money. They're going to sit there and see you coming in on the bid. They're going to see you sitting there, trying to limit in, with some in the share. They're going to see you moving your share entry around, chasing the bid because they know, you don't understand how to scale into the trade. You're trying to go all in on one position. They see you coming in with your little 1,000 share, and they're going to walk the price up. Increase that ask on you. Increase the ask price. You're going to start chasing because you think it's going to squeeze and going to leave without you. And you're going to buy up at the peak around, let's say $1 when the stock just came from like 90 cents. You buy up at $1. As soon as you buy $1 with your 1,000 shares, guess what happened? It pulls back to 92 cents. You start sweating like, woof, what happened? I'm down $92. Goodness. I'm almost down 100. What happened? The stock was going up though. Okay. So there's a lot to it, is my point. But it's not as much as you think. You have to be patient. Patience is one of the greatest attributes you can have in life, period. But especially as an investor trader, when I say patience, and this not necessarily meaning just sit there and just watch trades bypass you. I'm saying when you put together a setup, right? You have a certain criteria that you follow before you get into any trade. Of course, we use a lot of the basic things. We say what, why, where, and when, right? The 4 pillars of success, right? What you trade and why you trade it, where to trade, and when to pull the trigger on it. If you can answer 3 of those questions, that means, guess what? You feel more convicted to take the trade. Then you can know you're taking it under the auspice that you kind of checked off the fundamental box, the technical box. You feel comfortable in your situation, right? As much as possible, right? When that happens, if you get comfortable doing that more and more, it's going to help you refine your skill set eventually. Now, it may work several times, right? But don't necessarily mean it's always going to work, consistently, because the markets are always what? It's erratic, especially during these times. The markets are very volatile. Why? Because look at all these things that's happening in and around the planet. Markets can't catch a break. It want to just go up, but it can't just go up because everything that's overshadowing the market is like trying to push it down. What I mean by that, meaning it's too many issues in terms of the money flow that's messing up the market, which obviously by default gonna pull it down. be it supply chain issue, bad guidance with companies, dealing with Russia, dealing with inflation. Again, money becomes tight. People don't spend so lavishly. What's going to happen? You need people to buy the products and use the services that these companies are selling. Not rocket science. If there's any chink in that armor again, or less value of people spending into the system in that regard of commerce, what's going to happen to all these high flying stocks like Apple and all this stuff? What's going to happen? They're just going to magically hover and just stay up off of what? Off of just air alone. They're eating air sandwiches, right? As they say in the South, they're eating air sandwiches, right? They're eating them air sandwiches. You're getting full, ain't you? No, they don't work that way. Right. So you're learning again in real time how to read and follow money. That's all this is, guys. No more, no less. And I make it sound that way because I want you to realize that's what you're gonna have to do. Fundamentals is just following the money, right? Whether they make money or not. You know, technical, same way, it's follow the money. Well, how do we know that? The price action. Look at the candles. The big old green candles, and big old red candles, successions of those candles, what they look like in the pattern, right? When they kind of, right beside each other, whether they producing certain kind of what? A signal, be it bullish, be it bearish, right? Be it, in between, right? Be it, back to bullish, be it back to what? In between, midline. Now you got a point of support, that $1,000 homeostasis point. Guess what? If that ever goes, you're in trouble for real, right? For real, it goes, you're in trouble. Now you what? Bearish, 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 bearish. It's going to make sense, guys. The more you touch it, the more you see it, the more you diagram it, it's going to make sense to you. Stay hungry for all the right reasons. And there's no timeline on when you feel like you need to get this. It's going to work when you have time to work it. Simple as that. Find time for it, you'll learn it. Free time, find time, research, do your homework, study the market, see what's going on. Eventually it's going to sit in that subconscious and you can be like, okay, this stuff starting to make sense, bro. Right? This stuff starting to make sense. Eventually, it's going to go to making sense up here and go to making sense what? As they say, you're going to start making them kind of sense. You're going to be right here making it rain. But guess what? Not at the strip club. You're going to be making it rain what? In your P&L and then sitting right back in your screen the next day because you don't want to get that money back. You're like, I want to grow this. You start thinking like a what? Like a boss then. Like, I'm conservative like a mud. Like, yeah, man, I'm conservative monetary-wise. Like, I'm a Republican monetary-wise, but I'm trying to build this here, boy. Again, I'm trying to... Because you start realizing the power of it now at this point. Money is a tool. It's a resource. Use it for that reason. It ain't for all this goofy stuff that people got you thinking it is. You're looking at it all wrong. You think that's the case. That's just from where I sit. I'll just say that. But reality is that, no, it ain't what you think everybody else out there talking about. Yeah, no, that. But, man, you can work wonders with 50 cents if you know how to hustle. I repeat, you can work wonders with 50 cents if you know how to hustle. How to hustle. There's a lot of stocks in the market right now trading at 50 cents a share. Don't necessarily mean all of them are good. Don't necessarily mean all of them are long-term investment. Doesn't necessarily mean that all of them are going to be what? Fruit bearing. But in the same breath, if they have, matter of fact, since we talking about that really quick, and I'll do this real quick before I get ready, shut this thing down here. Let's do this real quick. GP. So when people always say, man, I ain't got enough money to get started. I need this, I need that. I ain't got this, I ain't got that. And, they're just trying to figure out, well, in a lot of ways, they're making, as one would say, they're kind of making excuses, right? Making excuses on why they need not try, right? Why they need not try to learn at least, right? So really quick here. Shall just right here, right? Let's dispel that the myth of I don't have enough money, enough bread, whatever what people say, right? Let me show you this here. Yep. All right. See it right here? This little stock right here, guys. Y'all see this here? Let me go to 5-minute chart. See right here? This stock yesterday was trading at what? 33 cents a share. 33 cents a share. 33 cents a share. For every one share, costs you 33 cents. Boy, that's gonna break a lot of y'all right there, boy. A lot of y'all tapped that already. I can't afford that, bro. Tap out, bro. Tap out. Too much. A lot of that stuff sitting in your old wallets, your book backpacks, your couch, and and your seat of your cushions and your couch. Look, ashtrays, whatever. People don't use ashtrays anymore. It's all sitting out in your console in your car. You got this loose change all over the place. 33 cents a share. Stock went up as high as what? $1. They ain't $1.50 today. Almost a whole $1.50 from 33 cents a share. $1 worth gets you how many shares? 3 shares. Hypothetical, if you bought it 33 cents. Let's just hypothetical. $1 gets you 3 shares. The stock went up near $1.50. Hypothetically, how many times 33 going to $1.50? Close to about 5, right? So we just say 4 for the overage, right? So 4 times, right? That stock turned over, meaning your share count structure turned over 4 times. So that's 4x. You 4x your money in that moment. Essentially, that means what? You had 400% gain on your dollar by buying 3 shares at 33 cents. Y'all with me there? Right? Could make this up. So that means every time. So what's basically, let's say $1.50 from 33. We'll say hypothetical, about $1. We'll just say $1.20 just for hypothetical. So that's $1.20 times 3. $1.20 times 3 or 4, right? Or whatever. Right? You only bought 3 shares, though. You got $1. So yeah. So 3 shares. So that means that dollar picked up what? $1 and what? $1.20 some odd cents a share. So about $3.60, right? $3.60, right? About $3.60 in profit, plus your dollar to get you in the trade, right? So now you got $4 and like 60 some odd cents, and you started with $1. That bought you a $5 fill-up box. I hope you don't eat that, but you'll get it. That bought you a $5 fill-up box at KFC somewhere. You got some biscuits, right? Got some biscuits and some chicken, and it only cost you $1. Hustling. Now, people are like, well, what's the story? That's the whole point of this. You go do the back research, you figure out, what's going on. Like some of this stuff pop off in pre-market, you don't know what's going on with it. Like, why did it start running today? Then you start looking around your landscape, meaning the broader market. What's causing the market to go up right now? What are the stocks that are going up right now, right? For whatever odd reasons. Again, commodities are the staple kids on the planet right now. Everybody buying up a lot of these commodities: wheat, oil, gas, lumber. Or y'all see the stock just running right. Palladium, nickel, right? Some of these mining companies. This is a mining company, a mining holding company, Highcraft Mining Holding Company, right? Has something to do with commodity markets, almost guaranteed. The fact that it says mining in it, that's a commodity value. Not rocket science. Connecting the dots really quick. If you decide to make a decision based upon previous chart history, this, that, and third, at least you have some At least some understanding, at least to a degree. At least to a degree. You're not struggling with the idea of what's going on here. You know how to put 2 together real quick. Now look where the stock came from. This stock was lower than 33. It was about 30 cents a share. Look where it came from. Couldn't make this stuff up. This stock was trading literally at $15 a share. $15 a share back in August of last year. It was trading at $15 a share. 15. And it went all the way down to 33 cents. Are y'all kidding me? Some people have what they call 52-week low scanners, and it's not even a scanner, it's a screener, where you can plug in like any stocks that hit 52-week lows, right? Or you can set it to certain parameters, right? When it drops more than 20 cents in a day or something like that. Some of these screeners are very, intricate, where you can set those different parameters, and whenever certain stocks fall into that category, it'll trigger, and you can go like, oh, these are new stocks that I could probably trade at, very well oversold prices. Certain sectors, right? I'm looking for stuff that's in the energy sector that's oversold, blah, 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 blah. It hits those points. Guess what? You're like, okay, you got my attention now. What's the normal volume? Now, is there abnormal volume coming into the stock recently? Oh, it is. More people starting to buy now. So that means you're in the front run potentially. Okay. It's so many different ways to look at this stuff. I could be here for hours and days, and I will too, because I love this stuff. But I gotta go, right? I gotta get ready to go because I gotta handle some business. But I'm just putting out some ideas of what you need to look into. The things that you think that you probably shouldn't look into are the things you probably want to look into. They call it nerd for stats on a cell phone, right? You ever hit that little button on your little cell phone that say nerd for stats? Stats for nerds. I was about nerd for stats. Stats for nerds, excuse me. And you be like, man, I ain't about to go in that side of the phone. I'm good. Long thing cut on, fingerprint, all that, call, I'm good. But you go into that stats for nerds and look through some of that stuff, right? That's where the money's made. In the data and the usage and the components in terms of what is, the moving parts, right? The fluctuations, right? Again, that's what we do when we break down this information like this right here. This is what they call stats for nerds. But guess what? It ain't that you can't learn this, or it's outside your pay grade, or it's outside your common sense. It's not. All this stuff is just what? Breadcrumbs. Reading up on the stock, what it's about, what it do, what's the future, what the competitors are, where's the price at this point, what's where it came from, stats for nerds. Nerds are just people who have a vested interest to want to know exactly how much they can about it. That asset, given certain conditions, whatever, popping up on the radar off the cuff, pops up on the screener off the cuff. What's going on here? Track it. Okay, I'm good to go. Let's go. At least you understand all the risk that are involved if you take a trade under that perspective, as opposed to just chasing stuff that have no clue, right? You could put together even a technical trade without even fundamental news based upon how to, read technicals. I mean, the stock came into today, literally what? Look at the flat line. Look at that consolidation. Look at it. Literally 3 or 4 days, it was just going sideways, going nowhere. 30 cents, 30 cents, 30 cents, 30 cents. All this is considered to be what they call kinetic energy. Once that energy releases, like if Bollinger Bands was on this trade right now, them Bollinger Bands probably be real tight. Just tighten down like a rubber band effect, pressure cooker effect. As soon as some abnormal volume come in or buyers come in, what does it do? It sends the stock. Look down here at the very bottom. Down here, you see basically no volume down here. None. Spotty at best. Spotty. All of a sudden, look at this volume right here. Out of nowhere. All this volume right here, out of nowhere. That's what we're talking about. Abnormal volume. Because of a sector rotation or a sector interest, whatever the case. Y'all get it, but I'm just breadcrumbing. So again, man, we'll be here for days, one would say, but y'all, this is what it takes. It's repetition. Repetition becomes repertoire. The more you see it, hear it, flap it, rip it up, rub it down, open up, whatever, right? It's the same thing. Get comfortable in this space. Get comfortable dealing with these assets. Get comfortable, sharing the information between your peers, right? Again, your brethren, your sister. This is what it's all about, because here it's great to share it with people, right? Because you want all ears and eyes and minds literally trying to break down this information if you can. It's a think tank, right? It's like, this is great, right? No competition. Everybody purely working for the best interest of everybody. Why? Because we're trying to take money away from the markets, not each other. See how that works? Eliminates the biggest question that most people deal with in the business sector. It's competition. It's none here. None. And people so excited to share with you what they know, given they have time to. Because as the saying goes, one of my favorite quotes out there by Robert Klein, when one teaches to learn, believe that. Because you want to give people good quality information. You just ain't gonna throw stuff out there off the cut like Tourette syndrome. That's not how this stuff works. Why? Because some people may not be a discipline to be able to deal with that information out the gate, and they go out there and try it, not knowing what to do all the way, and they're bomb. Then they'll look back like, well, I got it from you. Then you're like, well, no, I gave you context though. And that stuff went over their head. They just so excited about wanting to make money though, right? But then they realize real quick, okay, there's more to this than, from what I really initially looked at it as. Let me do my research now. Let me study a little bit more. Let me understand how this works so I can make it make sense to me. Not necessarily what's coming from them, because that's good. I'm going to steal from them too. But I need to also make it make sense to me. So when I'm by myself, I can apply it. Right? So it's a win-win. That's the whole point about it. It's a win-win, 1,000%, when you learn how to fish as opposed to waiting on fish. The market just provides you the pond. It provides you the pond, the fish. It provides the wood. It provides everything you need. You just got to accept it, right? And work it properly. Look at this here. See right here? Look what the market did today. It provided it today over here on the spot. Look at this here. Look at here. Look at this. This is a trader's market from 415 to 427 all the way back down to 415. This is a trader's market if I ever seen one. I've seen them before, of course, but I know what it is, of course. But a lot of people is like getting this for the first. This is the craziness in a good way. This what they call this is craziness in a good way. Couldn't make this stuff up. Could not make this stuff up, guys. I mean, markets just all over the place. I mean, that's 13 point run in an hour. Gave it all the way back in about 2 hours. And people that were just chasing it up here stuck. This market is brutal. But it's necessary. It's necessary. Why? Because it's going to teach somebody something. People are learning right now how to deal with volatility, how to read volatility, how to assess risk better. We call it paying tuition. Pay a little tuition. All right. That lesson was well learned, right? That was a great course I just took today called Market Collegiate course of trading volatility and not being emotional and undisciplined and distracted and, trying to force my will on the market. The market like, bro, I'm going to eat that up and spit it out. Get out of here with that. We don't, no, big money over here, bro. Big bank, take little bank, right? That's basically what happened. Trade it properly, yeah, you'll bank. All right, my little 425 puts, I got at around the 425 area. Loving it. For now, right? They in the money. For now, loving it. Same way the little calls that was bought above this 419 area at a little bit over 420. Ran it up to 424. All right. Scalp. So that's it, guys. So I'm gonna get out here. I know I'll be here for days. I love this stuff. and I appreciate each and every one of you guys, because again, it takes a band, right? It takes a band. And all of us the lead singer, all of us the lead, musician, all of us the lead R&A guy, whoever it is, R&D, whatever they call it, like A&R guy, excuse me, all of us the lead production. All of us are capable of doing every position it takes to produce this opportunity. That's what I love about this stuff. All right. As we say, Ubuntu. I am, because we're peers at this. It's the greatest opportunity given if you have the proper ability to learn it organically, and with the understanding that there's no rush. That way you won't be messy. You won't feel like you're rushing. No, take your time. The market ain't going nowhere. They're not. They're gonna be here after you leave. Your great grands are gonna be still hitting the market. You probably hope and by that point, you still should have some shares in the market somewhere. Right? Put it in your will and your trust when you leave your kids your bag when you're gone, right? Look, y'all can sell some of it, but make sure y'all always leave about 10 shares in some of these stocks right here, right? It'd be like 2,200, right? Jugger still got some shares in the game. And you been long gone. Like that might still my footprint, but my QSIP number still working out there in that market, but getting it. Right? Don't sell it all, right? But leave them right there reserved. Let it keep feeding. But anyway, y'all get it. So I hope y'all guys enjoyed this bill. Again, Russian markets, right? That's the topic. All right. The new market hedge, right? Russian oil, right? Russian oil is the new market hedge. And y'all know exactly what I mean by that at this point, right? We've been talking all this long, right? Russian oil is the new hedge, right? Because it's displaying to you what? It's displaying to you what's causing the market to be in a state of what? Flux right now. It's because of the scenario, not just Russia as a whole, because we don't just pin it on Russia only. It's deeper than that. It's more, it's America's, perspective agenda. It's Europe's perspective agenda. Right? All the moving players that's in the mix of this right now. Ukraine, right? Those who have a vested interest, those who are just, provocateurs. Y'all seeing firsthand stage on how messy nations are. Real time, you're seeing how messy a lot of these nations really are. and you can be comfortable in your own skin to make that assessment and not feel like you're being unpatriotic because you detailing the truth. I tell people every day, your life here on this planet is sovereign to you and your situation. Period. You don't owe nobody nothing. You owe nobody nothing. No nation, no government, no nothing, no nobody. That don't necessarily mean you don't need people. That's the difference. That just means that if you're competent and learn how to, work the system or the situation in a way where you can be, in control of your situation, more so than having, people in play to, throw cards in your game plan, hold you up, dime holding up a dollar. If you learn how to make your own money, since is my point, guess what? You can speak from a place of unfiltered truth. You should do that anyway, but definitely you make your own money. You ain't got to worry about all the other goofy stuff out there that's got people all, living a lie just to make somebody else happy. So America is shooting itself in the foot right now by trying to punish Russia, right? So because of that, what's happening? Because of that, what is happening? Right? You know what's happening. Markets again, caught up in that same collateral down. Why? Because you're starting to see exactly how connected these markets really are with one another. Meaning different nations and their products, the imports, the exports market, the global commerce markets as a whole, you're starting to see it real time. So guess what? Wall Street bounces in volatility trade at the U.S. bans Russia oil. As soon as it bounced, it did what? It turned right back over. Now the next headline should be Wall Street drops because of volatile trade of U.S. banning Russia oil. See how that worked? All in less than 4 hours. That headline then changed 100%. 100%. That means a binary change. Could make this stuff up. Right? U.S. stocks rose in volatile trading on Tuesday as investors assessed the economic impact of a ban of Russian oil and other energy imports by the United States over Moscow's invasion of Ukraine. Right? They keep pushing that word invasion too, boy. I got I feel some kind of way about that. But anyway. But I mean, military science, I study that stuff sometime. Yeah, about that. Anyway. But that's it. So that's all I got, guys. So I hope this stuff was beneficial to you guys. Hope you got some out of it today. We're going to continuously look to try to, push the boundaries, push the tape, as they say, test the information back as much as we can so we can continuously make good decisions, right? Continuously make good decisions. Shout out to Over Sunny. Over Sunny, they killed it as well today on some spy calls that he bought on a pullback today as well. He caught that vol to rise. Shout out to Over Sunny getting to the bag today. Shout out to everybody else that might have been getting to the bag too. My next didn't post. I was that guy today because I got reprimanded for posting so much. So because of that, I'm on timeout from posting a lot of my gains late. And I guess I should say it on the live stream since we all here. I don't want people to feel like if I post a lot of the stuff that I'm doing in real time and trading it, because I know y'all don't think that way, but I'm just saying it. It's not for intimidation factor. Number one, it's to show you that we can do it. And when I put together a trade or a plan and me showing, if I'm posting, a lot like this, what I'm doing, this is my trade, this is how much it's making. I'm walking people through it so they can see it in real time. So it's more of a case study. But again, I don't want to overtake the chat room with all my this constant posting. Because sometimes to some people, it can be a little overwhelming or it could be a form of intimidation. And it's not, because that's just not my energy. Y'all know that's not my energy. It's to show people that it can be done. And it's a way to be transparent in the same breath. But again, I can get it to a degree where people it can be overwhelming. They like, man, everybody making money, but I'm not, something must be wrong or whatever. That's the energy I never want to give off. All right. So sometimes I'll pull back from that and I don't post as much like what I'm making. And I'm like, here's just a lesson. Here's the technical side to look at it. It's like, see what's happening right now? Look what's happening. See, wink. And so that's to show people, hey, this, what to kind of look for. All right. So I may do that a little bit here. Then I get back to posting the games, and sneaking in. But y'all get it. Whatever. Y'all know me at this point. No harm, no foul. All right. But I got reprimanded for doing that. So yeah. So I don't want to intimidate nobody or even give off the impression that I'm doing that because, if I can sit here and make this amount or that amount, and it's like, whatever. My endeavor for all of us to be making that kind of money and more, right? More, to be exact. But anyway. No harm, no foul, right? So that's it, guys. I ain't got nothing else, guys. Appreciate y'all coming through today. Appreciate you, Oba Sonny. Appreciate everybody in the chat. All right, everybody that came through today. Oba Rich be in the building, right? Shout out to the family that came through. Brother Snotball, the Snotball, right? The Snotball in the building. Our brother P. Smooth, our brother Ramirez came through today. Humbled again by the family. Anthony Johnson coming through today as well. You know, you're welcome here anytime, family. Anytime. Come through. You family over here. This is how we get down. This is how we rock, right? Who else we got in the building? That we had brother Over B. Humble came through the building today as well. Brother Sean, right? Our family. Who else came through? Sister Angie, right? Ilba Angie was in the building, right? Our brother Ramsey came through. Our brother Sadai Samuda came through. Oba Zane came through as well. Oba Divine Fuller came through. Brother Mathis came through. I feel everything came through. And of course, the awesome panel, right? The brothers that always get it in to hold your brother down. Appreciate them brothers, man. 1,000%. Over Brandon, over Chris. You know, y'all know how we do, man. It's the fam, right? The money cracks, right? The money cracks in the building. Shout out to everybody that comes through as well. And I always show love to the channel. Everybody that might have watched this on Twitter, Facebook, we appreciate your patience as well, your view, right? You're welcome to come on our panels anytime. Again, we don't do echo chambers. We welcome anybody that got market information or news that want to share. Anybody, no matter where you are, it's no intimidation. You're welcome here, right? We appreciate you too. All right. With that being said, guys, I'm out of here for the evening, right? Got to go put together some game plans for tomorrow because the way this market just ended today after going up today, right? Right. All one can say, deep breath. Let's get it, right? Because right now we got some, you know, in the money scenarios, you know, have to make a little scalps. So anyway, y'all get it. So we'll see you guys on the next one, guys. So I guess let me see what can we go out on today. I need to do some new videos too. I got some new stuff coming. I just been busy lately, so I got some new what they call market video. I'll be doing the market video, right? Put some music to it and post some information on financial literacy, right? So what would be a good one today? Whew. After what we dealt with today, see, curious investor, clutch, or vibe. What's a good one to go out on today? All right, the market definitely had a clutch move today, though. Clutch would probably be a good one today. Yeah, but it's a lot of stuff, man. Even with Stitch Fix for earnings season, boy. Yeah, we'll do clutch. All right, clutch, right? Peace, power, profit, family. Peace, power, and profit.
The bar raising, we keep moving it up. Ain't no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. I got faith restored, why you pushing the brakes? I ain't full of myself, boy, I'm full of mistakes. I came from humble and roots, I'm here to stand and deliver. Had no one gassing me up, except the man in the mirror. I used to work on my handles, and now it's handles of liquor. I write these songs in a dark room, the candle will flicker. I stay practicing heavy, for when the game's on the line. It's like over and over, I run the plays in my mind. I'm a psycho, I'm taking my time. Rushing perfection is a dangerous crime. You gotta give it and take it. That's what you do till you make it. I had to roll with the punches and take the hits from the flagrants. I'm saying the bar raising, we keep moving it up. And no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. An off game don't mean I'm losing my touch. And no excuses, I ain't using a crutch. Apologies if I was doing too much, but I always came through in the clutch. I was falling, had me stalling. I was way down, now I'm balling. I done came up, and I called it. I done came in the clutch with the game on the line, I know. I operate from a higher place. Wait, some decisions don't dry erase. I'm doing what I can to fuel the flame like a fireplace. To make a bunch of money, buy my mama a fireplace. We make incredible songs to celebrate and get mad lit. Once upon a time in Hollywood, I'm like Brad Pitt. My homies say I live a life, yeah, just a tad bit. Learning how to move in this rap shit. I told them that the bar raising, we keep moving it up. And no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. An off game don't mean I'm losing my touch. And no excuses, I ain't using a crutch. Apologies if I was doing too much, but I always came through in the clutch. I was way down, now I'm balling. I done came up, and I called it. I done came in the clutch with the game on the line, I know.
calm down before you stress up the groove. The energy a little different when the blessings accrue. Hey, who you talking to? Just know I ain't no regular fool. Could be anything in the world, but I can never be you. Because I stand tall like I'm on my tiptoes. Baby, you think a little too small. I got big goals, baby. Hey, where the money at? Look, I just need the info. Pronto, I go and get it and split it with my kinfolk daily. And I'm the type of that might change my number on you. Yeah, that's how you react when people took a slumber on you. Pretty brown skin, baby, I can see the summer on you. You see all the bread and I know it make you wonder, don't you, don't you, don't you? I ain't surprised at all. Seen them rise and fall. Went up the mountain, it wasn't hard to climb at all. At the top, I found some relief. I finally got some peace. Carry on, but please don't mess up the mood. Yeah, I worked too hard for it. No, I need it, beat it, before you mess up the mood. Yeah, ooh, I worked too hard for it, and I need it, so please don't mess up the mood. Don't mess up the mood. Don't mess up the mood. Yeah, I worked too hard for it. Yeah, don't mess up the mood. Oh, it's so crucial, I gotta keep it. It's in the air, it's everywhere. No, it's not a secret, and I bet they didn't think that I'd ever get it. Everything you done, I get it. The life you dreaming, I live it, and I'm coming in high. You better get out the kitchen. Yeah, I could make a hit on whatever you pitching. Baby, let me fill up whatever you missing. Or you like it up at the top, it's a better view, in it? I'm not surprised at all, no it. Hey, what you need? Come on, just pay the fee, I supply it all. Went up the mountain and it wasn't hard to climb at all. At the top I found some relief, you see, so please don't mess up the mood. Yeah, I worked too hard for it. No, I need it, beat it, before you mess up the mood. Alright, ooh, I worked too hard for it. So please don't mess up the mood. Don't mess up the mood. Don't mess up the mood. Yeah, oh come on. I worked too hard for it. Yeah, don't mess up the mood.
I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now you be surprised at the info you get is by letting them talk, so I'm letting them talk. Gotta keep quiet, maneuver in silence, then let them in, chalk up their body, another one body, that's just how it go. I got some secrets, I'm shaking the game so they stay on their toes. Stay in your lane, I to stay on the go. I can play with the pros and act like a rookie, so they overlook me, then I double up again, none of their knows. None of them cold, they just got lucky but never adapted, so I'm to the one if it's coming to blows. My enemies cutting it close, I let them think that they got me, but what do you know? I had them beat before we ever spoke, I'm ready for smoke. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now they ain't go harder than me, they need a blade in a sheath, a shank in a piece, a crate full of heat, an army, a fleet, a tank and a jeep, a navy at sea, with ace a marine, an ace up their sleeve, a team of marines, a freak on a leash, a beast with an appetite, razor for teeth, and still they will lay at my feet. Boy, you got the wrong one. I gotta look over all of my publishing statements for Q1 as soon as the song's done. I gotta call up my mama and tell her I made it as soon as my log's done. I gotta read all my trade publications and sip my tea till it is all done. I think it's all fun. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now you be surprised at the info you get is by letting them talk, so I'm letting them talk. Gotta keep quiet, maneuver in silence to let them in. Chalk up their body, another one body, that's just how it go. I got some secrets, I'm shaking the game so they stay on their toes. Stay in your lane.
Everything is twofold. What's joy is pain on the other hand. And what happens when the one that you love is the main cause of your suffering? I need you like I need air to breathe. I need you to save me from me.
I can't breathe, I need to get some air, but it's a toxic addiction. You're a guilty fiction. You can't breathe and you just need some air. Give me all of your lies, cause you're my demon in disguise. I learned to love the catch you keep me in, but the walls keep closing in, and I don't wanna die. But your presence feels so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe. Yeah. Ow! Yeah. Y'all think too small, I got big dreams. You just starting, I'm way ahead at the end scenes. Started reading and dodging all of the quick schemes. Money like your Spotify, boy, I got 10 streams. And I'm still looking for more. My people, they got a soar, I'm putting that on the Lord. Ain't accepting, ignore, just kicking down all the doors. Guarantee you, boy, if I ask for it, it's gotta be real big. I gotta make it just for my kids and for their kids' kids. That's wealth years and years. Promise my brother soon as he out and finish this bid, we finna do it bigger than anybody ever did. The odds is real big, jobs that's real big. Satan trying a little, my God is real big. Stayed up on the ground and the cars is real big. I gotta do it big, the only way that I can live. And I promise I'll try to. Before you count me out, homie, let me remind you. They was blocking the shine, now I think it's my time to. Counting them dollar signs like lights, they'll blind you. Let me rewind to back when I was broke and I couldn't acquire 2 cents. And now I got 2 rents. They was sleeping on me, homie, must have got too big. Call my phone, I be like, who this? Damn right, hell yeah, I'm brand new. Smell like can too. I'm fresh forever like canned food. Try and tell me what I can't do. I wanna see the world, my vision on Shamu. That mean I got goals that's real big, foes that's real big. Your offer too little, sorry, my soul is real big. Coming into the ring with blows that's real big. I gotta do it big, that's the only way I can live. I gotta do it big. I gotta do it big. I gotta do it big. Gotta do it big, that's the only way to live. Gotta do it big. I gotta do it big. I gotta do it big. Gotta do it big. That's the only way to live. Come on. Yeah, come on.
All right, guys. With that being said, I'm out, guys. Peace, power, profit. Any last words over Chris on the way out the door? I think over Chris probably on the grind right now too. So yeah, you're getting it in. All right, guys. So we'll see you guys on this one, guys. Peace, power, profit, the family. Peace, everybody. Peace.